All right, good morning, everybody. How's everyone doing this morning? Let me know if you could hear me all right, if you could see everything okay. Good, all right. Just give me a 1 in the chat if you guys can hear me okay. We definitely got a lot to discuss this morning. Got some notes so I don't forget. All right, appreciate you, Fritz. Audio's good. Okay, 95, okay. All right, perfect. Well, today, as always, we're going to go over our process for weekly preparations. We're going to kind of talk about some reasons why traders fail. And we're also going to talk about the first hour of trading on a daily basis for the indices. And then, of course, we're going to kind of discuss Power 3 and then answer some questions, right? So, yeah, hope you guys have had a good weekend so far. Yeah, we got a lot to go over today, so yeah. So first and foremost, before we get into some of the, later things that I'm trying to talk about, obviously we're going to just go through our prep call, go through all the different assets, figure out, what our assumptions are. Then I'll get into a couple of critical things that I'm going to talk about later, okay? But we could see that next week we have a decent amount of news, right? We had, CPI last week, right? We had all these different things. So this week we have a decent amount of stuff as well. You can notice right off the bat that Sunday has nothing, Monday and Tuesday there's nothing, right, in terms of news. So, when things look like this, like I've said before, you want to automatically begin with a low expectation and you want to expect high resistance. Not that it'll always be that way, right? But for the most part, just off the last couple of weeks, when there's no news, you can just see that the conditions are a little different. Sometimes it becomes unfavorable and you have to be very, very patient. Pretty much in all the live calls, we've had to start off like really patient. We've had to adjust at times. And most of the time it's been on days where there's no news, right? Or just like simply the start of the week, allow for price to manipulate, and then going into, Tuesday, Wednesday, Thursday, and then even Friday, we have a better feel for what price is likely to do. Higher time frame wise, everything has been pretty accurate still, right? Kind of retraced a little bit more aggressive than we anticipated at the beginning of many of the days last week. But nonetheless, we made sense of what price did, why it ran to the places it ran to, and narrative and the whole idea of where price is going, what it's doing overall, has still been pretty much lockstep with our assumptions. All right, so good morning, Tony. So yeah, given the fact that there's no news, given the fact that we always start off every week and every day thinking of Power 3, we're going to just simply use Sunday, Monday, maybe even going into a little bit of Tuesday. We're going to look at that as potential consolidation and manipulation. And because there's no news, automatic high resistance filter. And of course, if it opens up and there's things to operate within and it proves to not be high resistance, and something shows up, then obviously we'll be able to get in front of it with no problem. But that's just the automatic assumption, similar to how we look at seasonality, right? Seasonality gives you a historical reference as far as what price should or has done, over the last 20, 30 years. Okay, so you go in with an expectation. Well, that's what we're going to do when there's no news, right? Or right when we start a week, we got to just assume power three is going to unfold somehow, because that's just the way it is. There's always power three happening. And then, of course, we'll just let price print and keep our expectations low as price tries to show us its hand, okay? We could see the Tuesday up until Friday, obviously, or Wednesday. Sorry about that. Wednesday to Friday has the bulk of the news. It's kind of interesting how Saturday next week has a news event. Not too sure what the hell that is. It's like some type of summit or something. Central bankers, financial people. These are close to the price usually. Okay, that's going to be interesting. Not sure what the hell that is. But yeah, I guess it's an annual thing. It only happens once a year. That's pretty interesting. Well, I'm going to probably look into this a little bit more and see what the hell that is. It's actually on Friday as well. And Thursday. Officials can create significant volatility. Okay. All right. Well, we're going to keep our eyes on that. I think I've heard this before, talked about once before by, I think, ICT himself. I think he's mentioned this before. I can't remember exactly what he said about it, but just off what it's saying here, we can expect high volatility. And of course, we have the FOMC minutes. I'm not going to be too worried about that. It doesn't really do much, right? It does create some volatility, obviously, like every news event generally does. But we're not going to put too much stock in this, right? As far as like needing to be too cautious. We'll just obviously see what happens on from today going into Wednesday. And we'll be able to break down things from the higher time frame, obviously, before any of that happens. We'll get a good idea. All right, but we see the news events happening. So these are going to be the days where the most dynamic, probably obvious events are going to take place in terms of delivery. So the bulk of your trading should be done towards the end of the week, Wednesday, Thursday, Friday. And we'll see what price wants to do around that. We got PMI, we have unemployment claims. As you guys know, who've been here for a while, it's my favorite news event. It's not overly volatile, but it's also it also gives you enough to be able to find something reasonable with institutional sponsorship. So we see it there on Thursday. We see there's a spread out delivery of the news. So when that takes place, obviously we're going to look at the first one as a potential fake move. Okay, so we'll use the beginning stages of stuff just to observe, or maybe even frame something going against whatever Monday, Tuesday did, or Wednesday too, right, on Thursday. And then we'll kind of see how 6:30 delivers going into 6:45 on Thursday. And then, of course, going into the silver bullet, we'll see where we're at. But that's how you want to view when there's multiple news that's spread out, especially when it's from like the bond market open, which is 5:30 or 8:30 a.m. Pacific Standard Time, 5:30 a.m. Pacific Standard Time. And so we'll kind of see what manipulation looks like and all that. But again, in a nutshell, towards the end of the week, obviously there's more jam-packed news. So most of the delivery will probably take place towards that time. Then we have obviously no news for the first 3 days of the week, Sunday, Monday, going into Tuesday. So automatic filter of low probability, high resistance. It's not a be-all, end-all. Doesn't always happen that way. But we just automatically have to start with an assumption that could be the case. So that prevents you from going in, over-leveraging, like over-trading on these days, trying to push too early when something may not be there. It just sets your expectation to chill out, right? And just allow price to print and gather intel for the most part, unless, like I said, something takes place that's worthwhile. which we'll be able to get in front of. Okay. So yeah, that's kind of like the news outlook. So with that being said, let's move over to our first basket of assets to observe, which always starts, for anyone that's new, with the interest rate markets, because the interest rate markets have a heavy impact as far as what price is going to do across these other assets that are influenced by them. The bonds influence or have a heavy impact generally on the foreign currencies, GU and EU, and the indices, and the yields have a heavy impact or pretty solid correlation with what the DXY is going to do, right? So that's why we start here first, so then we can build background information, so then we can further support and trust what it is that we decide on these other assets like the foreign currencies, DXY, and the indices. Okay, I just want to give you guys a quick reminder. If you guys support the channel, you like what I do, or you get value from the channel, or you think someone else can benefit from the channel, definitely don't forget to subscribe and like the video. Leave any thoughts you have, obviously, in the comments as we continue. And then, if you have anyone that, like I said, can benefit from what we do, or can maybe bring value to the community as a whole, definitely invite them as well. It doesn't matter how many years they have in terms of experience, whether you're first starting out for like a month, or you've been trading for 20 years. There's a lot of stuff that we can go into and help each other improve on, whether it's from you taking my perspective and adjusting your own perspective based on that, or you just sharing your thoughts with the community, so then they can also get the benefit as well, because you guys are just as important as I am, those of you that are here in the community, right? So yeah, that's much appreciated if you could do that for me. But yeah, so starting here, right, we're actually going to move to the monthly chart. So based on the last couple of weeks, how I've basically broke this down, systematized everything, what is the first thing we do once we skip out of the news and go to the interest rates, right? When you start on these higher time frames, what's the first thing you're looking at or looking for? And Tony, yeah, the last week going into the next month that creates the quarter adjustment, which is September, I'd say the last week of August is going to be significant. So yeah, PD arrays, right? It's definitely a PD array. What specific PD array are you looking at when you first get to like a higher time frame chart, right? Which PD array? The very first one that I always bring up when we get onto these intermediate, near-term highs and lows. Yeah. So like the current or the highs and lows from the week or month that just passed, right? Or the most current candle, right? So you take that and you take the high and the low. Automatically, that's the first thing. You're setting the foundation of what it is that's important right now. Okay? So the first and foremost thing is going to always be, if you start the monthly chart, weekly, or the daily chart going into a new week, you look at the current candle, right? Or, in some cases, it's going to be the previous candle. For the monthly chart, this is obviously the current candle. But if you're on, say, the weekly chart, it's going to be, the previous candle, right? Well, I guess you could say it's also the current because the new one hasn't started yet. But the most near-term candle, essentially, right? And you take the high and the low, and then you also take the last two candles, see if there's a high and low based on those candles. That's important as well, because that gives you the current most near-term liquidity, regardless of what time frame you're on. All right, because these candles right here are more important than any of these candles are, at least for right now, when you're observing like where you're at currently. Obviously, once you do that, you then take the most recent or like most near-term PD arrays. Highs and lows are a PD array, but I'm specifically mentioning like PD arrays as in order blocks, fair value gaps, wicks, right, midpoints of wicks, breakers, whatever's in close proximity based on the PD array matrix. But again, the very first thing you look at when you go to like the monthly chart after you've looked at the news is going to be the current high and low on the monthly. And then of course you go to the weekly and you do the same thing, right? So we could start here though. Right, so we see that there's this monthly fair value gap. All right, that's a near term close proximity PD array on this monthly chart. Then you got the monthly low right there. Got another previous monthly high. Okay. So you got the monthly high here, monthly low, previous month's high and low. You can see that the previous month's high in this current candle, obviously it was used as an important level because it reached into it. So you could see how important this is. Whether you're targeting this up here or this down here, it still is going to use this near-term liquidity. Because this is a monthly chart, I mean, it's very useful on a day-to-day basis, week-to-week basis. I mean, clearly, because you could see what it's done so far. If you didn't have your attention above this high and you're not paying attention to it and you're thinking, oh, well, this or this, you wouldn't really see that as a significant move, right? But Power 3 can simply use previous candles, highs, and lows when you're on these higher time frames, right? For the monthly range, clearly that's been used, right? Same as this candle basically delivered, right? It delivered above the previous candles, the previous monthly candles high here, right, from the previous month, and then it also targeted the low of that, right? All these other PD arrays that are way down here or way up here, they haven't been utilized, right? Or at least for now, and it's been kind of consolidated, whatever. But it's still used those near-term liquidity pools. So you can get a very easy way to find the range that's important and what liquidity pools near-term are the most important for what you're doing right now or going into the next week. And it's just hopefully simple, right? Simplified. Because you could, of course, try to look at these up here and these down here. And although those will end up being important, depending on where it decides to break out to, in this case, the downside has not been invalidated, right? Remember the last couple of weeks I've been mentioning if we break outside of this monthly fair value gap to the buy side, that would then change our opinion potentially, and it may look to target something like this or the high. Or if it stayed below this, like it is currently, it's still like leaning towards price continuing to drop. Okay, so we'll see, right? We got equal lows down here too. So now we can move on because we have this outlined. I'm not sure if I want to mark it because it might get a little bit busy in here, but let's see. See if I can make it a little small. Where is the monthly high and low? There it is. I'll actually change the style. You hear my dog going crazy? Oh shoot, whoops. All right, so that being said, let me go mark it correctly. Per monthly low. And I don't really feel like it's necessary to put that up there. We already have that one, so. So yeah, like I said, these are the first things you do. Okay, it's very important to have a process, a structure. You don't just go in there trying to find opportunities to execute. You got to figure out how to lay the foundation of your opinion. Most people are unorganized. They don't have a simple process that's repetitive like this. And that's why their stuff is just not desirable, right? Their results. They're always confused. They're always on edge. They're like, oh, I don't know. Like, I'm uncertain. Well, if you guys have been here for the last year, and those of you that have been with me for the last 3.5 years, as I've been going public, you could see that we have a very systematic thing. We're never really surprised, okay? We're not 100% correct. Higher time frame, though, has been pretty insane. We've been in like the high 90s. Right? I can't remember a week where we got the narrative wrong. And you guys that are here probably can vouch for that too, because most of you guys that are here right now have been here to watch that. So, and that's directly a result from what it is that we do in terms of process, how we identify what's important, okay, and why, and it's just highly effective and hopefully not overly complex. It's very particular things. Price can only do one of three things, right? In any moment, right? On every time frame. It's either going to attack some form of a higher low, which I have all the significant highs and lows marked off in my liquidity mapping template in the free Discord and in my private group, and I talk about it here. It's either going to retrade, rebalance, or create an imbalance, or sometimes it reaches into like an order block or different PD array, or it's going to consolidate. Right? So you have to determine at any moment what is price doing within those three categories, right? Or modes of delivery. What is it doing here? If I was to ask you guys based on those three things I just mentioned, what is it doing right here? Right? Can you tell me what it's doing so far or what it's been doing so far? Right? Based on those three things I just mentioned. Let me know in the chat. Yeah, so yeah, based on those three things, right? We're not going to mention no market maker models or anything like that, right? What if you're looking at price currently right now in terms of the delivery, right? With these candles currently, right? What is it doing? Is it trending aggressively? Is it reaching for a higher time frame PD array, or is it consolidating based on what we see here? Consolidated, exactly, right? It's literally not doing anything. I mean, of course, you could then say like where it's consolidating at, like at an order block or a fair value gap or, something like that. But what is it actually doing? It's overlapping candles, unwilling to move anywhere. But of course, you could say that it's inside of a monthly fair value gap. It's inside of the quarterly bearish fair value gap here, like you see. Right? But overall, the delivery is not aggressively trending. It's literally consolidating. So in order for us to change that opinion, right, we're going to have to see price break out towards, whatever it's going to break out to. Then we can determine, okay, it's reaching for this, or it's leaving behind an imbalance, right? Or, whatever the case may be based on those three questions. But it kind of just simplifies the view, right? It's a very, rough review, obviously. It's not super detailed, but it's, again, the foundation of what it is that you're going to build upon. Okay, and since we're consolidating, right, we do have different levels that we can identify and build a deeper narrative. But to keep it very simple and start the foundation of what it is you're trying to look for, it's literally consolidating. And you just ask yourself one of those three questions, especially when you're on these higher time frames. It gets a little bit more tricky when you're on the lower time frames. Obviously, we have process for that in itself. But even on the lower time frames, you still ask yourself a very simple question like that. Which one of those three things is taking place, right? Is it attacking some form of a higher low from the list I give you guys? Is it creating rebalancing or retrading to an imbalance or some obvious PD array that you can identify and price? Or is it consolidating? You know, and again, like I said, the simple answer here is, you could make a deeper analysis and say it's, trading through here and it's stopping in an order block or a fair value gap and we're, delivering from that. But what is it doing inside that? It's consolidating. So what's it really doing? It's consolidating for right now until it breaks out, because then it would be delivering from an order block, reaching for some form of a liquidity pool or another PD array, right? But until it does that, if you see overlapping candles like this, it's simply consolidating. But this is how you want to see things, right? Right when you get on the chart, before you start really dissecting it and breaking things down on a more advanced perspective, trying to figure out, why is it consolidating? All these different things. You have to first identify, is it trending towards a level? Is it creating a fair value gap or retrading to, some form of a PD array, or is it consolidating? And again, what we see currently is there's lots of overlapping candles. And you look at these other assets too, overall, right, together you could see it's clearly consolidating. Not only on a larger scale, right, from the high extreme here to the low extreme, but also on the more near-term level, right? It's just overlapping candles. Very easy way to identify consolidation is if we're overlapping candles like this, right? That's like the telltale sign, especially on the higher time frame, because that's what consolidation is. You can break it down even further also, like I said, by taking the extreme high here to the extreme low, and you can start to paint why price is consolidating. For those of you that have been with me for a while, I've said this multiple times over the last couple months, especially with these assets. But what can be a reason why this is consolidating? Can you guys give me a reason? I mean, you could mention fundamentals. You could mention, what I just mentioned here, right? Or what I just outlined, if you caught that. So we could expect more consolidation, or next PD array is manipulation. Yeah, so we can expect continued consolidation until price displaces. Then we can start to make assumptions as far as what PD array it's reaching for. For now, it's just aimless, right? Because you could verify that by being super simplistic and saying, okay, there's overlapping candles, right? You could then break it down and say, where is it overlapping, right? Why is it consolidating? Well, if you take the extreme high here to the extreme low, price is inside the 50% level, right? The equilibrium. What does price do at higher time frame equilibrium price points? It promotes consolidation unless it breaks away from it, right? Otherwise, if there's no breakout happening, we're literally just hovering around this equilibrium point within this larger range. Volume as it came from being... Yeah, so with these assets, another thing aside from what I just mentioned about price being stuck in this range, it's also the summer months, right, that has a pretty strong impact as far as whether price is going to be, moving a little faster. You could see over here, right, September, October from last year, it was pretty aggressive. But you could see how price has been a little shaky all throughout the year this year for the overall interest rate markets because of the fundamental adjustments taking place in financial policy or economic policy with the United States. So that's another layer of more advanced perspective you could have to make sense as far as why it's consolidating. But obviously, what I was just mentioning in terms of keeping it super simple, you ask yourself one of those three questions or all three of them and determine what it's doing, right? Is it trending towards a specific level? Is it reaching for some form of a higher low? Is it creating imbalance or reaching for a different PD array? Or is it consolidating? And once you can just determine that from a basic level, you could then go on and add more elements to it. But this is a good way of identifying condition, right? Like what it's currently doing, what's the current condition in a very simplistic way. So then you can, again, start adding on to things. It's very easy for us to jump to, like, right away becoming super advanced, right? Like, okay, what is the deeper context, and just totally gloss over the simplistic signals that it's telling us, like overlapping candles, right, equilibrium, and it's consolidating inside one of those three questions, right? That's just a down and dirty, easy way to determine what the condition is, right? And then you can start adding on things like seasonality and, what level is it consolidating at, right? And any of the other more advanced things that we talk about, right? But again, for simplistic sake, right, we are currently in consolidation until something changes. What is it consolidating within, right? Let's move forward a little bit. Price is basically inside of an inversion for a value gap here on the 30-year, right? It's kind of stuck there. It's been bouncing around that. It's taken buy side up here. It's taken sell side, and now we're kind of returning back into the lower portion of the range. Still very close to equilibrium in here. Okay, let me actually put this up so it's a little more visually pleasing. Okay, so you can see the equilibrium that we're basically, close to. Okay, let me move this over. So yeah, it's just kind of been held. And again, that's mainly because of what's been happening with the economic policy, the uncertainty. They're going to cut rates. They're not going to cut rates. Like the whole conversation in feud in regards to that. That has caused this consolidation since, April-ish. But then also, even since 2023, it's been kind of crazy. More uncertainty came into place going into this year versus the past couple years. But I mean, even then, past couple years, you could still see some of them are also overlapping, right? But yeah, for now, again, that's kind of our opinion about what this asset's going to do. We have a rate announcement coming out in September. There's conversations of a deep, deep, deep cut in terms of interest rates. So that, that'll have a pretty significant impact. And we'll see kind of what the overall impact is going to be when that time comes. But again, for now, right, we have our liquidity pools identified simply by looking at the current and previous two candles on this monthly chart, right? Take the highs and lows, take the PD arrays that are in close proximity, measure out equilibrium. This is the parent range here. Okay, but you can also take it a little further and say that this high is the most recent dealing range, right? We're within a parent dealing range from the extreme high to the extreme low. Took buy side here, sell side was taken over here. Okay, but you can also try to get a little bit closer to price and get an even closer equilibrium gauge, right, or mapping. And you can see from this high, it took buy side here. Okay, so and then it took sell side here. So within that parent range equilibrium, right, this is the parent equilibrium. But on the more near-term perspective, we also see that this high to that low has magnetized equilibrium as well within that parent range. Okay, and you can kind of see what's happening within that and kind of justify the consolidation even further by seeing how close we actually are to the near-term equilibrium within this dealing range in here. And why is it a dealing range? Because it took buy side and sell side, and that is now a new range. When a dealing range is created, it requires some form of a buy side liquidity pool taken and a sell side liquidity pool to be taken. Once that happens, the range that was created off of that creates your new dealing range. All right, obviously, there's type 1, type 2 dealing ranges, right? We're not going to get too in depth as far as the difference of that. But again, on a basic level, that's why this would be something important to watch as well. It's pretty interesting also how this monthly inversion for value gap is being utilized significantly, and the equilibrium within this dealing range is pretty damn close to the middle portion of that. And you can just see how sensitive that level's been. You can see how sensitive the equilibrium point has been, right? And we're kind of in a discount, or we are in a discount, right? A light discount, right? If you get down to this deeper level down here, we're at an extreme discount. The upper, 25% from equilibrium here is a slight premium. Beyond that, like up here, was an extreme premium, right? So if you break these PD array or dealing ranges, you break them down into quadrants. You can get light premium, extreme premium, right, which is the upper portion, right, just broke down a little further. And then the lower portion, you can get a light discount and then an extreme discount. Generally, extreme discounts, if it is bullish, it's going to send price like a rocket ship, especially if you can couple that with a stop hunt and a PD array. And then the reverse is true when we're inside of a premium as well. And that's also in conjunction with what we see overall in terms of what price is doing. Okay, but that's a little bit of details about navigating ranges, right? And then, of course, how to identify the most near-term dealing range. And then, of course, like I said, the 3 questions to identify what the current condition is, so then you could go ahead and do, this more advanced stuff, right? But yeah, so because it's overlapping, right? Because it's not only overlapping on this lower time frame, but it's all or on this lower, like more near-term perspective. We also obviously have the larger parent perspective to observe, just in case price gives us a pretty decent breakout to one particular level or another. In some of these, obviously, it looks like we're more interested in favoring or holding above equilibrium, right? Or closer to equilibrium. This one's a little bit more in a discount, the 30-year. But then you go to the 10-year and the 5-year, and you see that they're kind of, a little bit more interested in being a little bit higher. That doesn't take away from the fact that we're still in a downtrend, and doesn't take away from the fact that we're still in consolidation overall. So it's just aimless. And I know that it's doing this because of the massive changes economically, right? So a big deciding factor as far as what the interest rates are going to do going into the rest of the year, is the bigger deciding factor is going to be on this next interest rate announcement that comes, and then we'll probably see a lot more activity that'll be more impactful for the indices DXY relationship to the interest rates. It'll probably start to break out at that time. It is, let me go show you guys when that is. Okay, it's here on the 17th. Ironically, look at this, right? So September, that month, right? Once we get into that month, that's when we reset our IPTA data range, 20, 40, and 60-day look back and cast forward idea to kind of gauge liquidity pools that are significant within that time window, right? 20, 40, and 60 days. And then, of course, it can also be the map for a potential quarterly shift. Also, going past 14th, 15th, 16th of this month, that basically has the quarter adjustment from the third quarter going into the fourth quarter. We can see that this is happening on the 17th, right? The federal fund rate. Well, that's also pretty much within the window where we move into a new quarter. Okay? Very interesting how these things align. So, again, it's going to be very, very, very significant changes that take place if, depending on what it is that they do. If they keep it the same, then we'll stay probably in consolidation. It probably won't do much because it's still uncertain. But once we get some certainty as far as whether we're going to cut or stay the same, it's going to give us a pretty clear delivery. And I think that the rest of the year is going to be extremely dynamic for the indices and the DXY if we end up getting a pretty dramatic cut. Right? If you just open this and kind of read up on some of this. And then there will be another one in October. So yeah, September, October. Wow. Wait. March, April, May. September, October. Wow. So we got 2 back-to-back months that are going to have interest rate announcements. That is going to be very, very interesting. So yeah, just given the fact that, given the conversations that have been had about the interest rates, the turmoil, and then now all of a sudden we're going to have back-to-back freaking announcements, and there's a hint that price is potentially going to be cut because of certain factors in the economy right now. It should have been cut a long time ago, given what's been taking place. Not only the fact that we've been, having a lot of growth in the economy. It's not a crazy work environment for like normal jobs, right? There's been more, job cuts as a result of what's been happening. Which you can make your opinion on whether it's good or bad. I'll keep my opinion to myself, honestly. But yeah, it's been time for the rates to cut. Everybody else in the West has cut their rates. It's time for the U.S. to cut our rates. And once that happens, given all the different things, the income coming in and the positive developments within the U.S. economy, I think it's going to just be more rocket fuel. So we can expect a pretty dynamic fourth quarter, which I think it's going to be probably the most dynamic compared to some of the previous years. Maybe set manipulation in September and expansion in October. Yeah, so Fritz, that's a good thing that you just mentioned right there. So every quarter there's a new quarterly candle, right? So you could eventually, you guys will get more comfortable with identifying these higher time frames. Hopefully I'm doing a good job as far as pushing you in that direction. I know a lot of you guys that are on the call right now have been giving me massive feedback, and just a lot of clarity has been pouring into you based on the things we've been talking about, which I'm extremely humbled and grateful to hear. But mentioning what Fritz just talked about in terms of potentially a power 3 idea, quarterly candles also have power 3. Yearly candles have power 3. 6-month candles have power 3, right? Well, we'll just stick to 3-month because obviously it fits within the quarterly perspective. And each quarter you can paint out a power 3 on a larger scale before you go down to the lower scale and use power 3 on a daily, weekly basis, monthly basis. It's also showing up on the quarterly perspective, basically the 3-month chart, right? So it's definitely something I want to mention for your studies. Fritz, I'm glad that you just mentioned that, because you're looking at something that's very, very helpful. It will be very helpful eventually for you to get in line with large scale trends and where price is going on a 3-month basis, maybe month-to-month basis. And you can imagine getting in line with the quarterly perspective, right? It's part of the reason why I always talk about these things on the higher time frame. But you can imagine getting in front of the quarterly perspective on an asset can allow you to be consistent with where the narrative is on the higher time frame, and you won't be fooled by, say, the daily chart pulling against whatever your assumption is, right? You'll still trust the higher time frame narrative, right? Whether you're on if you're on a quarterly basis and you get comfortable with that idea. Okay, so again, Fritz, that was a good thing to mention. So yeah, keep that in mind, right? Every quarter, there's going to be an open price. The open price can be placed generally around the September time for this next quarter. Basically, the month that has the quarterly adjustment, you could put your open price there, or you could wait till the actual contract month changes, because the actual change is even closer to price, because that's when things actually change, and that's when investment starts to really start to pour in to the next quarter for the rollover. Okay, so yeah, it was a very good thing to mention for you guys. And again, Fritz, clearly I'm getting your attention on the right things, because students wouldn't just randomly come out and say that unless they've been exposed to what we talk about and what ICT talks about. Looking at 3-month chart for T-bonds, current consolidations kind of exactly. There you go, Fritz. You're looking at the right things. Absolutely, that way of thinking is absolutely correct. I've been mentioning this too, right? Like, the consolidation has a reason why it's consolidating. There's fundamentals we talked about. We talked about where price is at, equilibrium-wise. And then, of course, if you go to the 3-month chart, quarterly perspective, you could see it's just been kind of a sloppy mess. Like, overall, it's just been sideways, right, for a long time, right? At least over a year, right? But what has it been gravitating towards? It's been gravitating towards sell side. So what's happening? It's still bearish. It's still looking to go lower. It's gradually going lower. But quarter to quarter, sometimes there will be a retracement that takes place, right? So you got to determine whether you're in that retracement, right, and what price is currently doing, what it's reaching for. But overall, like Fritz just mentioned, looking at this chart, it makes sense, plus the fundamentals, plus what we just talked about in terms of the overlap of candles, and price just simply moving sideways, right? So yeah. So hopefully that stuff was insightful. Yeah, with that being said, we'll move forward a little bit. So again, hopefully you guys have mapped out these important levels. We'll do the same stuff for the other assets we go ahead and look at. But yeah, so these are the most near-term liquidity pools. I can say that, again, like I've been saying, if we stay below this monthly inversion fair value gap, it's going to continue to continuously gravitate slowly towards the sell side. Something I did mention the other a couple weeks ago, even last week, we do see that there is a slight SMT in here, and it makes sense that the 30-year is the lagger, going slower and more, being more interested to stay below equilibrium and continue to push lower, versus these two, which have the higher low. That's showing that the 30-year is more interested, or has less buy-side interest than these, right? You could see the lower low being created here on the 30-year, the higher low being created here between the 5-year and 10-year. So that's why they're a little bit deeper into the premium portion of the range versus the 30-year, right? The SMT, it's showing that something's happening on a fundamental basis with the big players. This is SMT. ICT calls it smart money technique, and it's basically them tipping their hand to you as far as the fact that something's taking place with smart money, right? Either a big reversal's coming, or something's happening that's making this crack and correlation take place on a larger scale with the big players, the market makers, right? The actual people, not like brokers and stuff like that. Right, the people that actually have influence, right? But yeah, so just, overall, what we've talked about is hopefully helpful. It's pretty much all we're going to talk about here, right? We've got the low here, got a high up here. That's too far for me to really worry about it. We have this candle's range. We have the current candle's high to consider. And then, of course, we have the monthly fair value gap that's holding price. And again, like I said, the equilibrium point, and then the higher time frame, just showing us that we're not interested in doing nothing. And, the fundamentals taking place in terms of the announcements coming in September and October, those are going to be the drivers behind what this market chooses to do. So it may be like this up until, those announcements come out. Okay, so we will see, and keep this to the sideline like we have been the last couple of weeks, just simply because it's not doing much. One thing I do want to make sure I talk about before we move on is, if you see the interest rate markets going sideways like this, that's another reason why the DXY and the indices could be consolidating in the foreign currencies, or they could be cracked in correlation and doing things that you would not be generally expecting, right? Or trading outside of the concepts, right? Kind of just doing aimless things, right? That is heavily influenced by what this is doing. Okay, so if there's ever a consolidation in DXY and Euro USD or GBP USD or the indices, first thing you want to do is jump to the interest rate markets and see what the condition is, and ask yourself one of those three questions. Is it aggressively reaching for some form of a higher low, basically trending? Is it creating rebalancing or retrading to a PD array, or is it consolidating? Okay, and once you determine that, right, in this case it's consolidating. So if we were to see DXY, Euro USD, and the indices delivering in a very sloppy manner, this could be a heavy impact on that, right? And then, of course, we're in the summer months, which seasonally is a problem. Sometimes it's harder to read. Obviously, we've been able to navigate it, but there's been times where price was a little sketch, so we've had to wait longer than we had to the first 6 months of the year. Okay, but it starts to make sense of why the condition is what it is. And aside from the why, it shows you the condition in general, right? What kind of condition we're trading in, and what you can expect. right? Which, having that information helps you manage your risk properly. Okay. So that's why this is important. That's why I'm spending time with this. Some people may think it's boring, but that's too fucking bad. Okay. It is what it is. Okay. You want to be an expert at this, right? And get as much information as possible. And, know the why, the where, the when, the how. And part of that has to do with all this stuff that we talk about. That's why we start here. And, you guys see the results. We're right more than we're wrong. And it's not just because I'm a lucky guy that's just guessing. It's because there's a foundational layering approach to our bias and narrative objectives, and it's highly effective. It's not just looking at the NASDAQ and assuming, whatever the assumption is. It's starting here, building the foundation, right? Building a non-destructible or indestructible foundation, so then we can move on to the other assets and be certain when we make a decision, that's, one thing's going to happen over another, or why something shouldn't happen over another. All of that comes from having this layered approach. So that's why we start here. That's why I spend so much time here, because it's part of the process. It's part of why we're going to be correct generally with what it is that we decide on the indices, DXY, and the foreign currencies. Okay. So again, these are our liquidity pools up here. This is our most near-term liquidity pools. This is the condition we're trading within, which we just talked about. And until a breakout happens, getting us outside of this, we're going to still stay stuck in this and keep the interest rate markets to the side until they open up. Okay, and if we move down a little bit to the weekly, we could see we've taken high here, right? So previous week's high was taken, and we got an aggressive trade or aggressive delivery back down away from this monthly fair value gap, but also delivering from this quarterly order block, this quarterly bearish order block. So nothing is telling us overall the price is changing the state of delivery at all. It's still delivering lower. We simply had some of the impulses higher to simply set up the drop. Okay, and it's just continuously been taking stops, declining, taking stops, declining, right? So lots of stop hunts declining. Stop hunt here, decline. We got respect to this, right? You take this wick to the high. I mentioned that a couple months ago. This was a breaker. I said that if this holds, it'll continue to drop. If we get down below this monthly fair value gap, it'll continue to drop. And all those previous assumptions from as far back as March have just continued to deliver and hold up. So until something changes, nothing changes. What is that thing that can change our opinion? 3 PD arrays have to be broken to the buy side. We have to start disrespecting levels like this monthly fair value gap. We have to start closing, using them as support to then see price continue to run higher. From this perspective, right, this quarterly order block, right, you take it from this open here, map it all the way to the high, get the equilibrium point or the consequent encroachment, and that's a line in the sand, right? We have a high here, we have this monthly fair value gap, we have the middle portion of that quarterly order block. Okay, so if price was to get up above there, that's when we would change our opinion potentially, or start to be flexible with price potentially seeking buy side delivery. And if that was to take place, my attention would be up here because we got relative equal highs. But that's way later. Before it gets up there, it has to break through these levels first. But yeah, so we'll see if price can continue this undertone of bearishness, because that's what the overall view is. But aside from the overall direction that it's trading within, we're within a consolidation for now. So we're going to need displacement to kick us outside of this. Okay, so yeah. Otherwise, it's just going to continue, and all this was layered engineered liquidity. And it's going to continue to try to punch that. Right? So yeah, we'll see what happens. But yeah, let me go see some in the chat. Fred said, in my understanding, the bonds are perhaps the most important aspect for a country's economics. It's one of the most important. I'd say top 5, if not the most important. Because this determines loans, the loan rates, basically how much it costs for people to borrow money, businesses, governments, everything, right? That's why Trump has been saying Powell needs to drop the rates, because we're almost about to have to finance our debt. And the interest rate markets are going to determine how much of an interest rate is going to be tacked on top of that $1 trillion a year in debt, okay, to finance our debt. If it's a lower rate, that could be the difference between $300 billion, $600 billion of interest declined or added on to what it is that we're refinancing. Okay, it goes the same with mortgages. It goes the same with credit card debt. It goes the same with any form of borrowing money. That's pretty much what these impact. Okay, and that's why this is so important. That's why not cutting this stuff impacts civilians, not just to go against the political echelon of leaders. It's much bigger than hurting the president. It's hurting actual people trying to buy homes. It impacts home sales because people don't want to buy homes or even sell their homes if interest is so high. It impacts everything, and that's the same across different countries that have fiat currency. Pretty much every country, it has the same effect. If they're going to lend money or if they're borrowing money, so on and so forth. Money coming into a country via investors. Yeah, that's part of it as well, right? If they're borrowing money, you know what I mean? Sets the tone for the currency and companies. Yeah, it does. It definitely does. It gives them clarity as far as what's happening. It's either going to be massively overly expensive because of the high interest. Some like that for like the yields, right? If there's high return on yields to buy bonds, right? Then there's more investment that comes into the country in terms of them buying the bonds. Because when countries buy bonds from other countries, they're expecting a return on their investment. You know what I mean? This is how we finance debt as a country, at least for the United States. People buy our bonds and then we can go borrow more money. But again, if the interest rates are all messed up, it gets complicated in this realm of things, by the way. So if this doesn't make sense to some of you, don't be discouraged. It's not something you have to know about. You just have to know the relationship, right? And I, pretty much lay that out on a silver platter here every single week. But yeah, it gets real complex, and it's definitely one of the most, if not the most important economic driver behind a country, because it allows them to purchase debt if there's a lot of investment. But then again, if you have to refinance, if the interest is high, you're going to be paying a lot more in interest when you're trying to pay it off. And America has just been borrowing, selling bonds, to the point where it's like, if things don't change, we are at risk of a debt bomb. So all the changes and aggressive action taking place, which has caused uncertainty, but it's needed. All this stuff that's been happening is needed for the U.S. economy, but that directly impacts a lot of different things, like I mentioned. So that's why it's so important. That's why we pay attention to these things. It's not only important for technicals, but it's fundamentally important for the overall country health as a whole, financially. And our ability to borrow money, because every country borrows money because they're reckless and overspend. Right. So Tony said education, it's help. Okay, perfect. I'm glad, Tony. That and taxes is what government uses to build finance. Yeah. Exactly. So you're either going to increase taxes to have income while you also sell bonds, or you're going to have to bring investment to the country, because that also kind of helps the bottom line. America didn't always have an income tax, right? That only happened after certain presidents started cutting tariffs, right? Think about it. If you're a company and you have an opportunity and you have a good market and you are the cash cow for other businesses and countries to make money, why would you not charge a fee to do business? In a normal business environment, business owners will charge you for the opportunity to participate with them. Why is America for the last 10 years, other than when Trump was president, why have we been looked at as if we got to have free trade only for us? but everybody else charges us, but we have to give them such a low amount. I mean, it's just we've been taken advantage of, while other countries are abusing us. We're being expected to not do anything, and then there's backlash from all over the world against us for charging. There's not so much anymore because it was all just a facade. They were trying to put pressure on the government of the United States to not make things fair. But now people are they're just sucking it up as they should have from the start. But everyone's a drama queen. But it is what it is. You know what I mean? And again, the interest rates are very, very important in regards to that too. It's a reason to invest or a reason not to invest in America. You know what I mean? So yeah. That's enough of that. Tony said the fundamentals open up a new chapter of what this really is. Yeah, the fundamentals get you closer to what's actually going on. It helps you understand what you're doing instead of just thinking you're clicking buttons to make money off luck. It's some of those things that helps you be more of an educated, informed investor. And it's amazing. Oh no, for this, it's good. I just know that majority of people, you guys are freaks like me. You want to know everything. I just know that a majority of people's attention span is like a gnat. And if it's not talking about where price is going or where the execution is, they kind of lose interest. And it's unfortunate. But, it is what it is. It's not needed, obviously. But for those of you that are interested, I'm more than happy to allow that can of worms to be opened because I love this. I love this stuff. I could talk for 20 hours, right? If I didn't have respect for your guys' time, I would literally have you on the call for 10 hours talking about all different types of things and never stop. But I know you guys have stuff to do, and we're here to figure out what price is trying to do for the next week, right? No. That's the thing. If they just care about signals, they won't enjoy being here anyway. Because I'm not a signal provider. I'm turning people into signal creators, signal providers themselves. Although I do give signals here and there when I'm live. I always give signals in my private group. But I don't come out and do it like everybody else. Like, hey guys, buy here. This is where your stop goes. This is the target. Like that's not what I do because it doesn't help you. It's helpful somewhat, but the way that I do it forces it to be helpful. And it forces you to think, like, what's my model? Am I comfortable with this? Does everything make sense? Should I execute this because of my own opinion, not just because he's saying it? Is he taking this trade? I make you guys think about that a lot too. If I mention something, this is potentially a good idea, right? I keep it vague. So you're like, is it a good idea? Right? So then you think about it and then you force yourself to either decide that it's a good idea based on what I talk about and what I frame out, or you just don't do it because you got to wait. And then you'll see price print. And then I come back and say, yeah, this was a good idea. I took this trade. And then you guys think, damn, okay, well, next time I'm going to remember what I just had to think through in terms of process, and then it'll push you to be effective individually on your own. So you're not tethered to me unless, you want to just hang out to continue to learn, and, maybe help me provide value, right? Because you guys are becoming really good, and I'm grateful. So, yeah. But, yeah, with that being said, hopefully that was helpful, and some of you guys that want to learn more about the financial industry, and why these are important, like under the hood, why. Hopefully that was helpful, and hopefully you guys already got the gist of what my opinion is here, because I pretty much already broke down what I want to see and what the current condition is and how we're going to approach the bonds and yields. We do have some of these levels up here, right? Equal highs and equal lows. That's a close pool of liquidity, but we also have trendline liquidity, and we haven't fully upset the down delivery just overall, unless of course we were to displace and get above the high. Then we would have to see what's going to happen with this fair value gap, and then whatever else transpires from that point. But yeah, because this is kind of consolidating and we got to wait for more information for the most part, we're just going to keep this to the sideline and observe, but keep in mind all these different things that we mentioned today. Then we look to the yields. It's kind of got a similar thing, just in the reverse, right? This has been gravitating higher. If you guys remember, we called this entire move higher, right? So you just go back into the March conversations. I literally painted this out, day to day, right, week to week, and all the way up until price came up into this level up here. We are inside this quarterly bullish order block, all right, for the yields here, the 30-year, right? We do see that there's a quarterly order block in there. Let me take some of that off. We do see that wicks are starting to be respected in here, so we got to just see. We're stuck between the quarterly order block, or the quarterly order block here, okay, and the middle portion of these large wicks. If you go to the monthly chart, you can see we're inside of this bullish order block here, and the wicks up here above price, and that's also rooted in the order block down here, which again is a quarterly bullish order block. So price is holding the bullish overall structure. Only way we'll change our opinion here on this monthly chart is if price breaks down, starts to show support to these, or resistance within these middle portions of the wicks, like it kind of has started to show. We'd have to see it disrespect this bullish order block midpoint and then violate the mid portion of this plus this swing low in order for us to start thinking that, okay, we're going to maybe seek deeper prices like down here, and then maybe over here, target these lows as well. But you could just see it's just literally in a consolidation. So it's kind of aimless. Gravitating higher though, like overall, right? There's been no real breakdown showing us that like something like this is taking place, so it's been holding the things that are holding it up, right? Which is the previous PD arrays that are bullish. And, just structurally it's been holding up, taking lows, delivering higher, right? But now it's back inside consolidation. So if you go from this high to that low, you can see that we're overlapping in an equilibrium fashion again, right? On this time frame too. It's pretty interesting how it's either doing the opposite of the other asset, the bonds, or it's doing the same in terms of consolidation, right? And they're both classes of assets are just going sideways, right? It's weird how that agrees, right? It shows that these are massively correlated, but they're reverse correlated. But if one's going to consolidate, the other one's most likely going to consolidate too, because they kind of move off the same news events. It's just they're diametrically opposed, right? Similar to how DXY and Euro USD is, but the difference is obviously this one impacts what the DXY is going to do. It's like the driving force behind the currency, and then the bonds are the driving force generally behind what the foreign currencies are doing and the indices are doing. Okay. But yeah, I guess we won't have to spend too much time in this. Just know that it's reverse to the other asset, and so you just basically look for all the same things that I just mentioned in the bonds, but you look for that same thing but opposed in the yields. Okay. And then we'll put it to the side and just see what's happening, later on as we approach the next announcement, right? So yeah, of course we got the near-term buy side, sell side, and we need displacement to decide which one is going to really want to solidify moving forward, right? No monthly or quarterly highs close to the current candle. Should we look closer to the weekly and daily for potential? Yeah, if you're looking for targeting, if the quarterly perspective isn't really too close, again, that's why I have in my liquidity mapping idea, or just like the process, I have higher time frame references for higher time frame analysis, and then I have lower time frame references for lower time frame analysis, right? And those lower time frame analysis areas are for intraday day trading, right? And just day-to-day engagements. The higher time frame perspectives are generally on that larger view for like a more like macro view of things, right? Fritz, you've had a chance to screenshot or note down those the liquidity mapping key levels, right? Both the higher time frame and lower time frame. Have all of you guys written that down? I really hope you have, or at least screenshotted it. I know you guys are in my communities, either in my private group or in my the free Discord. Okay, Fritz, you have. What about you, 95 and everybody else? Have you guys had a chance to write those things down? If not, this is my encouragement for you to go do so. Okay, I'm not going to go through all of them right now, but definitely make sure you have all that stuff written down. Okay, it's a template. Just like how I have been doing this monthly analysis, right, this higher time frame view, the quick and easy way to identify these things, it's a process. Well, that's also coupled with the other process too, right, in terms of the liquidity mapping. And then, of course, the lower time frame power 3 observations and way that we do that stuff on the lower time frame. Right? Okay, so all of you guys have it. So yeah, I'm not going to spend too much time here. We'll move on to the DXY. I'll let you guys go do an analysis on the yields if you want to. Just know that it's reverse. So if the bonds are consolidating, we're also seeing the yields are consolidating. The yields look like they're still going higher, potentially, unless something changes. And the bonds look like they are continuing to go lower unless something changes. We may be in a transitional period given the announcements coming soon. So again, that'll have an impact on what those assets do, and then that'll trickle down into what this asset and the currencies and indices are going to do too. But we'll wait for something significant to add validity from those assets to these. But yeah, so for now, for the DXY, we have obviously been seeing the price is clearly continuing to go lower. I have an opinion that we're going to reach down here. We had this weekly bullish order block. I think it was a 2-week order block? Yeah, was it this one? I think it was. Let me see, weekly. Oh yeah, no, we were looking at this. Okay, so we wanted to see when the week started how we were going to react to this order block. That was going to be a deciding factor as far as whether price was going to, start to really use this as a break to the buy side and continue to go higher, or if it was going to fail to hold in this level and then continue to want to go lower. Because we are still in a downtrend, use this as a stop hunt. The run higher was simply just a run to this monthly bearish breaker. And you could see the beautiful reaction from that, even further confirming that we are still looking to go lower for this overall asset, right, for the DXY. We can also see now that the wick has been respected on this weekly chart, hasn't even been able to get up there. So that's pretty significant, aside from the fact that we delivered from the high up here. And so price has now been just continuing to smash lower. You can also take this low to this high up here. That's buy side, sell side delivered, right? And you can map out the middle portion of that. It's pretty interesting how that is pretty much in alignment with, I guess not, right? But it was, the equilibrium point of this potential BPR, valid BPR here. You could see that the equilibrium point was pretty close to the breaker. But nonetheless, you could see how none of the candles currently have closed even close to the middle portion of this, which further solidifies the characteristics of this delivery within the balanced price range. It's further helping us trust that that is, in fact, the BPR, and it's going to hold until price starts breaking through levels like this, like the wicks up here, and then gets above some of these bullish PD arrays that have been getting violated. We also have this quarterly fair value gap. We could see that it's really trading within that, basically efficiently delivering all the trading within that, right? Trying to just close in that quarterly fair value gap. Whoops. So yeah, I'm gonna just continue to push the fact that this is going to continue to go lower. That's going to obviously support us in the DXY or in the foreign currencies and in the indices, continuing to see them go higher unless something changes. Like if this displaces higher and starts to turn this into an inversion, maybe it starts breaking through some of the wick up here, closing, and it gets above this high. If we get above this high, I am certain that we're going to end up trying to get up above here, right? Especially if we overlap these fair value gaps, because that'll be then really contesting this wick and contesting the likelihood of it going lower, right? So unless that happens, though, unless we get displacement, disrespect of these upper PD arrays on this higher time frame, we'll continue to support that the higher time frame narrative is bearish, because that's what it's been showing us for a long time. just, another reminder, just a refresher. We literally called the buy side of this curve all the way up and the sell side of the curve, and then all the way to where we're at. We've pretty much been 100% as far as where the DXY was headed. Okay, and mind you, that's a big statement, but you can simply go back and do your research, or stick with me for the next couple months, 6 months, or the rest of the year and beyond, and you'll see very quickly that that statement is not an exaggeration. That is a fact, okay, that I've proven live. So, hopefully that makes you confident in the fact that the time spent here is worthwhile and what we do actually works, right? So yeah, I guess that'll be my opinion, for a very simple opinion for the DXY. We'll do some quick analysis here. Got a previous week's low here, right? So we got previous week's low here and here. So these are going to be significant. If price was to break down below this lower overlapping fair value gap behavior, I will look to see that as a resistance point that pushes price continuously towards this low down here, the low from June. Okay. So let's put the weekly high. So weekly low. Why is the font so big? All right, so stretch it out a little bit. See, then we got that monthly breaker. Let's move that up there. Quarterly low. I guess that's the quarterly low. But I'll just move it down here. I don't know why it would be there, unless it was the previous quarter. But even that doesn't really make sense. That's kind of over here. Actually, this is in June, so this is the quarterly low, current quarterly low. Okay, and this is the current quarterly high. So the quarterly high up here, quarterly low. This is an entire quarterly candle. Okay, the current quarter, right? So this is the low, and this is the high. Okay, it's similar to how we look at the weekly candles, right? We outline the weekly high, weekly low from the previous week and the current week, and we get all the important price action for the week's delivery and the next day-to-day delivery, all by encapsulating the previous weekly high and low and the current weekly high and low, maybe even some of the the weeks that were previous if we're trading within it. You could see that this low to that high, we're trading within that quarter, or that weekly candle. So we haven't even really broke outside that range. That is another way to identify whether we're in consolidation or trending. Are we just trading within previous candles, right? Is that trending if it stays just back and forth within a previous range, like in this instance, the previous high and low from the week 3 weeks ago, right? So it's just kind of stuck inside of that, and you can kind of see that prices been gravitating lower within the downtrend, because that's what we decided price is doing, but it's just kind of been stuck, right? So yeah, we'll keep this low in mind. We don't really got to worry about too much of the buy side up here until it was to break out, and target that. But again, this is a near-term liquidity pool. Say we go into Monday's trading, or even next week, price could simply just be targeting this low, and then just stay inside the range. But even if it consolidates, if you're able to identify these near-term liquidity pools that are significant and very common, you can then frame something, even if you're targeting, or you want to target something lower like this or something up here, you could still frame out something on a day-to-day basis by simply using near-term important highs or lows based on the daily chart or the weekly chart, sometimes even the monthly, if the highs or lows are close enough to where price currently is. Sometimes it could just simply reach for something like what I just mentioned, right? So this is going to be important, right? And even if price was to open up, maybe drop lower, then displace to the buy side, this is liquidity in here that's important, right? It could simply trade through this low, sweep out that previous week's low within this quarterly fair value gap middle portion, and then use that as the opposing liquidity on that lower time frame to pair up smart money buys to then try to target bullishness. That's a hypothetical, right? But that's like an example of what it could be doing, like similar to what it did last week. All right, we got this wick here from 3 weeks ago, but we also have the previous week's high. What did it do for this last week that just passed? It simply traded above the previous week's high, used it as opposing liquidity, and then tanked, targeting the previous week's low as well. So previous week's high and low were taken out and used as the significant liquidity pools for the weekly delivery, right? As price continued in the narrative that was bearish, right? And then, of course, you can couple in the PD arrays like the wick, midpoint, how it respected that. You could couple in, the delivery up here, which is, I believe it was a 2-week bearish order block. Yeah, right there, see? So that's just further context. But again, I hope what I just mentioned makes sense. Very important price navigation tactic in terms of liquidity mapping and identifying important liquidity pools, how they're used, right? Simple scenarios. I hope it was simple enough for you guys to understand the importance of what I just mentioned. So yeah, with that idea being said, we're going to do the same thing here, right? So next candle that prints for the weekly chart, we have this previous week's low, right? Which I'm assuming is Friday's low. Okay, so going into Sunday and Monday, maybe even Tuesday, if price was to trade up in to the range a bit, because we're going to open here and have this available. So if it was to open, trade up, and it is going to go lower, we would want that to happen, right? So then they could trade up a little bit, work this fair value gap a little more, and then use that as a target, and then this as a target. These are 2 previous week's lows. And then there's a third one, a fourth one, and a fifth one. So you can imagine all the liquidity that's below those lows if price was to want to target sell side. And you can also hopefully see why that would be so useful on a day-to-day basis, because once you drop down to the daily or the 1-hour chart, you're then able to identify liquidity pools that wouldn't be as obvious to you, right, if you were just looking at the 1 hour, right? But then, of course, you can go to the 1 hour and you can start getting other pools of liquidity too, like near-term equal lows, right? We could get this low here, right, which is Friday's low. Okay, so I guess this low here on this current weekly candle is not actually Friday's low, right? This is Friday's low in here. Okay, so now we have an even more detailed list of liquidity, right, for us to target. This is the weekly low, so that may be targeted. But before it gets there, we also have the Friday's low. So, we may open up and just want to target Friday's low and then reverse, right? If you didn't understand that that's something that can be done and can actually be useful as a day trader or a scalper, you would probably just be aiming for this. And if it doesn't get down there, you wouldn't even consider this, right? So it's just the little nuances that people don't really understand and overlook a lot of times, but they're pretty simple, simple as, just the previous Friday's low, and I mean, without knowing what these lows are and why they're important, you just think that every high and low is just some random high and low, but in reality, this is significant. It's Friday's low. We got the weekly low, and we also have another weekly low here, right? Like I mentioned, that's this low here on this weekly chart. Okay, so this low here on this weekly chart on this candle, which is something I mentioned before I even mentioned the 1 hour, right? This low here, you could see where that's at. It's right there. So I'm going to actually mark that because that looks pretty significant. If we are going to continue dropping, that's a pretty nice level to target. But before we get there, what has to happen first? It's got to break down below this Friday's low and the previous weekly low, right? And then, of course, once it is able to target those levels, we then have the deeper levels down here as well, which is this low. Actually, take this one off right here. Okay. And then you could even go beyond that, right? If we were to get down below those levels, what's another target? Even if this extreme low is what you're targeting, right? How would you continue to march lower and still have a framework that's a little bit closer than simply just targeting the low down here that's pretty far away? It's going to take a while to get to. How can you frame out day-to-day liquidity rates, right? Or targeting of liquidity based on the list? Well, this is another previous week's low. You see this? You see the importance of this Sunday marker tool that I have? I can automatically see when Sunday is and basically frame out each week without really doing too much thinking about it. Like I can automatically see, and hopefully you guys can visually see too. This is a week, that's a week, that's a week. So the highest high and the lowest low within these gray candles, or within these gray markers, those are weekly highs and lows. Within that, you can also see previous days' highs and lows within that week, right? Within that parameter. You could see why this is important, why I use this, why I still haven't gotten rid of it. It's very important. It's very helpful for me personally, and I know it is. It's pretty helpful for a lot of you guys too that have taken it upon yourself to go add this tool to your arsenal, because it just helps you with price navigation. It helps you with liquidity identification, and it takes you as far away as possible from every high and low just being random. It allows you to see with a pretty clear vision what liquidity pools are important and why. And then you couple that with the liquidity mapping list that I give you. And you just have a very good process in terms of identifying liquidity that's important, and how to go about doing that. Okay. So if we stay below this daily fair value gap here, and we stay below the wick here, this large wick from this previous week, because that's going to be significant. We're going to actually mark that off too. So I'm not going to keep this on there too long. All right, so we got that weekly wick here. Let me actually make it smaller. Wick. Let me actually make it a little bit smaller. There we go. And so we saw this wick here, respect, it couldn't even get to it. I'm going to expect, if we're going to continue to be bearish and we're going to continue to march towards the sell side and, eventually hit some of these levels that I've been talking about, I'm going to assume that if price was to trade up, there's nothing to be concerned about, because we got PD arrays up here now that should be able to hold price, right? We got this up delivery here, which is also a wick, right? We have this, like I said, the wick here from the weekly chart, right? So we should not have to get up there if it's going to continue to want to march lower. Similar to how this one failed to break the midpoint, right? We want to see this next delivery, if it does open and go higher, we want to see that fail too. Not only do we have that wick to continue to hold price and hold the narrative that it's going to be bearish, but we also now have the inversion here. Okay, if we move up to the 2-day, doesn't really change much. So yeah, we have the fair value gap in here. We do got a swing high up here, but I think this one would be more important. So yeah, you got fair value gap, swing high, mid portion of the wick. That's 3 PD arrays to get violated if it was to start to change or start promoting the fact that we should be flexible and this maybe start to make an argument for price to want to go higher. But if all these levels stay intact, what's the point in trying to force this to go higher if that was your opinion? There's nothing telling you to do that. It's easier to just go with what it's doing, and hopefully me telling you the 3 PDA rule and the way that we validate things, hopefully that's starting to help you trust your narrative and the higher time frame importance. Hopefully my attention to that has been really, really obvious in terms of why it's important and how it can keep you calibrated with the right side of the market, even in the face of price going against it a little bit, right? This delivery in here was a bold-faced blue bullish candle, right? If you didn't understand the higher time frame, like the weekly perspective and the monthly, and go in there and try to decide or decipher where price is reaching for on those upper time frames, you would have probably been fooled thinking this was a run on stops, simple retracement, shift in market structure, trying to go higher. I never thought that. I said if we close outside of this, that would be a different story, because then we would break the wick and it would start really trading more aggressively to the buy side, right? But once it did this and gave this huge wick, even when price ran up into this, I didn't care. Yeah, the wick respected the BPR, exactly. See how amazing these concepts are? It's amazing, right? It's just amazing. It's clarity. Remember, the things that I teach, it comes from a place of trying to get you to have clarity. And again, I hope that I continue to do a good job with all of you, because I know that most of you guys here on the call that hop on me regularly, that have spent the time and are patient and watch what we do and see that there's value. Hopefully, you're starting to see there's probably more value than you even imagined when you first started. Maybe it's because the channel's small or whatever. And we just met when you guys first hop on, right? But hopefully you guys, just give it a chance. Those of you that may be new, and I promise you, you will leave this channel 6 months to a year from now, wishing that you found the channel sooner, because what I've done this year is a clinic. Okay, I've just absolutely crushed everything this year, live. More public than I've ever been, and hopefully that's encouraged a lot of you to stick around, because and not for me, for you. I want to see you guys succeed. I want to get your success story. Your success story is the cost with you being here on the channel, giving me a view. The only fee that I'm charging on YouTube is I want to have your success story. I really, really enjoy seeing those like progression updates from maybe when you first started to what transpires as a result of you being here. It helps me know that I'm teaching the right way. And of course, if you guys struggle or something doesn't make sense, you voicing that opinion helps me get better as a mentor. Because I'm not perfect. I've been teaching for 3.5 years now. Been trading for 6. So I still got a lot to learn in terms of getting people further and further in a quicker way. But I feel like we've developed a pretty solid system that's been doing very, very, very well with many traders, right? With them using it in their own hands. And hopefully it's easy to catch on. With a lot of you it is. Some of you it may take a little longer because maybe you got less experience. You're not as experienced or exposed to ICT's vernacular, right? Like the lingo and stuff like that. So maybe that will make it take a little bit longer. But if you've been trading ICT concepts for a year and you come and sit on my live calls, it's ridiculous. Okay, because you start to see some of the things you overcomplicated, some of the things that are important that maybe you didn't think were important, and it's organized. We do the same thing every week. So yeah. Hopefully, what I've just been talking about in terms of the bonds, yields, and DXY made sense. Again, we're inside these levels. We got to see if it's going to continue to hold here. I'd really enjoy to see a displacement, because then we can start to frame things out with maybe a retracement into the fair value gap that's created if it was to displace, or maybe displace below this low and then try to see a retracement into the order block that just continues to push price. And then we got these targets down here to keep tabs on, right? So this is essentially our overall structural framework of what we're looking for, what we're trying to identify, what's going to be important, what upsets the continued down movement, breaking 3 PD rates to the upside, the swing high, middle portion of this wick, the fair value gap, right? If it was to get up above that, then that would be something that would make us consider adjusting. We wouldn't entirely adjust because we still got to wait for the weekly levels to catch up, but it would put us in position to be able to capitalize on potential buy side delivery, if it's offered, but obviously that is something that may come later. So yeah, hopefully everything makes sense so far. Does everything make sense in terms of the DXY? what our assumption is, what we're looking for, and stuff like that. Let me know in the chat. Could we please have a look at correlation and SMT between ES and NASDAQ? Yeah, we'll talk about ES and NASDAQ after we get through the currencies. Yeah, does this make sense for everybody? Appreciate you chiming in, Fritz. What about some of the others that are here? I don't want to leave no one behind, right? All right, Tyler, it makes sense. Okay. Okay, 95 makes sense. All right, so I'll take your guys' responses. It makes sense with everybody. All right, well, that's good to know I'm doing my job right? Trying to get y'all moving. But yeah, so with that being said, we'll move on to the currencies now. And we'll kind of fly through this too. All right, so we've been calling for buy side in the indices or the currencies for months, right? We called this entire run higher. We called the entire move lower. They're reverse correlated to the DXY, so obviously that makes sense why we were able to do that. And again, if you haven't been here that long and you didn't get to witness that, you can go back and witness it. But you could take my word for it based on what you've been seeing, or you can just listen to some of the students that have been here, because most of them have been here for over 6 months at this point. Some have been here for a little bit longer. Some have been here for more than 3 years, and everyone says the same stuff. Like, this is not an over exaggeration. We're absolutely in front of what the market wants to do on this higher time frame, and that translates a lot of times to the lower time frame, as long as we don't overtrade and over leverage, and we wait for our models to perform within the proper time, right? So yeah, I think that we're going to continue to keep going higher unless something changes. Like if DXY was to displace higher and upset the delivery lower, and of course when the bonds and yields have a announcement that maybe cuts the rates or whatever, it's probably going to have a big impact. Not entirely sure what they're going to do, right? Because I've seen them cut and it goes higher. I've seen them cut and it goes lower, for the bonds. So, we'll have to just see what the overall end result will be once that takes place, the initial result, and then what transpires like a week later, or a couple of days after, to really get a determination of what's going to happen there. But as long as everything stays the way it is, this will continue going higher. We basically have traded back into this breaker. I mentioned this breaker. This is also order block. Yeah, big, huge quarterly order block. I have that outlined, actually. Right? So I feel like everything's going to continue. We've been calling price to go higher. We talked about the decline that took place, right? Price did decline lower, failed to break this low. There's obviously been this displacement that got above this. Again, this whole delivery lower probably had a lot of people thinking, oh, currencies are tanking now. Currencies are going to fall off the planet. But once you go to the monthly chart, you see a lot more clarity. It looks like it's just simply retracing. It attempted to get to this weekly fair value gap, but it didn't have to get down there in order for it to aggressively reprice higher again, because we're still inside this this monthly bullish breaker here and the quarterly bullish order block. Right? So this time frame, this higher time frame perspective, us being rooted in here it has allowed for us to witness this sharp decline and then still be able to trust that price has a likelihood to go higher. Right? It was a bit iffy, right? We wanted to make sure we were going to see what price was going to do within that, whether it was going to continue to hold. And if it would have broke down below this low, that would have been the deciding factor as far as whether this was going to be trustworthy to continue for a deeper dive lower. But that didn't happen. And then we got this change in the state of delivery above this order block. Also in conjunction with this breaker on the monthly, also the quarterly bullish order block, right? And it's just beautifully been delivering, right? So yeah, now once we get up above this will be a shift. I will look at this as a potential balanced price range. Also, it's probably a breaker. Yeah, it's a breaker too. So we'll look at that as a BPR. It will not have to break through that. And if it was to break through that, that'd be a problem. We also talked about this being a market maker buy model. Okay, if you go back and look at some of the earlier conversations we had about this. And yeah, I would have obviously preferred to see it break through this previous month's low, because I would have hit the fair value gap. But it doesn't always have to when you're inside of a higher time frame level like the quarterly order block or the monthly breaker level. It shouldn't have to trade too deeply into those levels before it starts to rip back in its intended direction if they're going to be valid. And you can see that it fully justified and validated the fact that it was going to continue going higher. So unless that changes, right, and we start breaking back down below some of these levels and turn some of these levels to inversion levels, we're just going to continue to march higher, right? We now have very, very juicy relative equal highs up here. We also have a potential gap up here it could reach for. And then, of course, we've got the quarterly high. And if we go to the weekly chart, we actually have another weekly high here. Okay, so we got relative equal highs here that could get punched through again using this as a BPR or a breaker. Let's actually turn that to a breaker. Just label that real quick for completeness sake. Okay, so this is a weekly breaker. Turn that purple. Okay, so we'll see if it wants to continue. The only way that we stop this and want to turn bearish and get away from the buy side entirely is if we see price disrespect the middle portion of this, okay, of the breaker, disrespect the middle portion of this order block here. I think price doing that would be enough for us to then target down here, because then we also would be showing respect if it was to reject from this weekly bearish order block, right? If it was to reject the midpoint of this and not really attempt to try to go back up there and results in a displacement that gets down into here, that's showing that it's respecting this bearish order block. Because if it was going to continue going higher, it should stay above this, because remember, when breakers form or order blocks form, they are balanced price ranges. So if we start trading deeply into levels like that should be holding, you're already showing yourself that it's going to go lower, or the market's already showing you that it's probably not going to be as bullish, and maybe it eventually goes later because for whatever reason, but it would be more likely that price would then look to try to dig down below this, right? Oh yeah, and then we have this fair value gap too, and the inversion here. Oh yeah, Fritz, that's a good idea right there. That's a good observation. I would have missed that right now. So yeah, we do. We got the breaker, we have the order block, and we have the inversion here as well. So if it was to trade back through that mid portion of this, it's ironic that would also be below this fair value gap. So technically that'd actually be 3 PD arrays, and it would also be 3 PD arrays being violated to the downside while respecting the opposing PD array here, which is a bearish order block. Also a potential bearish breaker, right? I think I mentioned that the other day too. The down delivery in here, if I go to the daily, right, we had the down delivery in here. If it was going to hold, it should have respected that. It did for a minute, but now we've totally got outside of it. So we're just we're going to keep these things in mind, okay? So yeah, does all that make sense? Because that pretty much justifies or pretty much depicts what we're trying to see, and then what would invalidate the opinion continuing to go higher. So breaking down below. So those three could be our, no, those three are. They definitely are, right? So breaking down below this fair value gap, disrespecting this breaker, and then also breaking through the center portion of this order block, breaking down through those levels, that's our 3 PD arrays. So yeah, that definitely is going to be our line in the sand. Good observation, Fritz. I would have missed that. I probably would have had to correct it later. But yeah, that right there is definitely going to be important for this weekly validation idea. Okay, and then of course we got the weekly high up here too. So I'm expecting going into this week that unless these levels are violated down here that I just mentioned, we're going to continue to support this quarterly bullish order block, this higher time frame bullish delivery. Actually clean up the I'll just take some of the new week opening gaps off of this. I'll look in the moment when I'm looking to frame something out, whether there's one of those there. All right, so okay, and like I've been talking about, like I always talk about, right? We got the current weekly high and low. We got the previous week's highs and lows. So 1 week high here. So I mean that's a frothy, juicy buy side liquidity pool. And then I've had this mapped out for weeks, and it still has failed to get up there. So I think that we are now finally going to be set to get up there. If this is going to take place, we have to see DXY drop. So seeing the likelihood of this potentially continuing to go higher just further solidifies our opinion that the DXY is going to go lower, which further solidifies the fact that we're most likely going to see the indices continue to go higher, unless something looks off, right? So yeah. So are you guys starting to see, if you guys haven't been seeing recently, how all this stuff works together to build our opinion on the asset we look to trade, which is the indices? That's why I do it last, because I want to have all this information first, so that when I go into the indices, I can make more of an educated assumption as far as what price is going to do. And then what would be a red flag, turning that off, right? Part of the red flag would have to be obviously 3 PDAs being violated against what our opinion is. And then obviously, if we start to see these other assets that have this correlation or intermarket relationship to the indices starts to change, then that can also be a real-time, in the moment red flag or adjustment period that may be taking place. So then we may then have to start to consider a contingency plan to our initial overall objective. Right? So it's like a process. All these different elements are like tripwires, right? So if something starts to, spaz out and do something that's not supposed to, that trips our opinion to have to go in and then start looking for, evidence of the impact it's going to have, and whether our narrative and analysis is going to be trusted in the asset we trade. Right? So each of these different assets we use to help justify an opinion on the indices, they're all like little tripwires, and if everything is not moving properly, it's like multiple tripwires are being hit, and that's going to, push us into an opinion that has to be more calm, more observant, more patient, and either wait a little bit or, continue to trust the direction it's going in if nothing's falling out of correlation. Okay. Intermarket relationships are absolutely amazing. It's near term. MMXM. Yeah, the buy side, just simply because it is, previous week's highs and lows, right? In this case, previous week's highs, simply because price is continuing to march higher. The structure hasn't changed. 3 PDA rates are still being respected. All of that justifies in a very simplistic way that price is going to continue to go higher. And then, of course, if DXY drops, it's good. Forgive me for mentioning it, but on the quarterly chart, both currencies have huge relative equal lows. Let me see if I could... Yeah, relative equal lows there. On the quarterly which are both currencies have huge relative equal lows. Are you talking about like way down here? Yeah, that's gonna happen in like a year, maybe more. May not even get there for a couple years. You talking about down here? These relative equal lows? Wait, am I tripping? There's relative equal lows there, but the currencies, the euro doesn't really have much of an equal low. But yeah, I think that if we get a positive, oh, okay. Yeah, I was like, wait a minute, what's happening? But yeah, they got relative equal highs up there. I would not be surprised if they're going to blast up there. And mind you, that we now have the technicals outlined as far as why the currency should go higher, right? What levels invalidate, what validates. And then we also have fundamentals that are coming very soon, which may be needed to get us up there. Because remember, higher time frame levels get targeted and fulfilled based on institutional sponsorship. You know, there has to be big money in the market for us to move to a specific level or away from a specific level towards something like this. So that's why the news and keeping tabs on what's happening with like interest rates and different things is so important. Because then you have the technical, then you have the fundamental as well, layered together. Then you have intermarket relationships together. And like I said at the beginning, there's a massive layering effect going on where we're able to then layer everything together. Okay? But yeah, most traders fail in many ways in terms of bias and narrative because they don't have a deep understanding of what's happening. You know, or at least a more than surface level understanding that is beyond their one asset. You know, most traders fail because of that. And a lot of times they don't submit to higher time frame levels like this either. You know, so, you know, they'd be failing because of this type of stuff. Just like a lack of detail-oriented thinking because they're just trying to get in and they're trying to sit on the couch, trade from their laptop anywhere in the world, and just push buttons. And they think it's that easy just to do that. You know, and their mindset becomes their downfall. You know, anything good takes time. Anything worth having requires work. And we should be excited and happy that it's hard to do this, because that means that once you're able to do it, you're in an echelon of human being that most people will never be able to reach. You know, it's definitely going to be an interesting week. Yeah, for sure. Doesn't big money also work off quarterly? Yeah, they work off higher time frame levels in general. Just overall higher time frames, whether it's a quarterly, monthly, yearly, sometimes daily, right, weekly. They like those levels because they can't put billions of dollars in execution on the 1 minute chart. It can't happen. They have to spread it out, and a lot of times they're working off those larger levels, higher time frame wise, with more time in between, so then they could piece together their overall execution or max position size while price is moving up to those bigger levels, while scooping liquidity up all within that time it takes to get up to a level like this high, for example. Right? So you see I already have preparation for the 20, 40, 60-day cast forward. We're going to do a look back as well at some point when we get into September. So we're going to go through that whole process again. When we get to the 1st of September, we're going to do our monthly analysis process again for those that may have missed it or just need a refresher. Appreciate your time and what you showed us. Yeah, no worries, Tony. I appreciate you guys always hopping on. That's the thing. You guys get rewarded for being here. You know, and some people hop on and hop off, but you know, it's their loss, and it's sad, honestly, because I want to help everybody, but you know, over the years I've had to just submit that not everyone can be saved. Those potential relative equal levels 60-day look at. Oh yeah. Nice. Yeah, that is what made me think of it. Everyone can't do this, and this was separate. Yeah, exactly. You know, and it's unfortunate because, you know, it's like right in grasp. It's right in people's reach. It's like right there, like this close, but their mindset is that little gap. Their belief, their expectation, their lack of discipline, their character flaws. It's that one little gap that's right ahead of them that stops them from doing this long term or just in general. And then someone will spend years to learn things, and they've been told certain stuff and what they got to do, like what they need to focus on, and the personal things have an impact, and they just discount it, and then they never pour work into it, and then it's just then they just think that it's impossible, and it's all because of them. It's not because of concepts. It's not because the market's impossible to figure out. It's because we are our greatest adversary. We are our own greatest adversary, and we will be the reason that this doesn't work, if it doesn't work. Because clearly, I've shown that we can call the market. If we can call the market, we have executions. There's hundreds of models that have been taught and can be discovered with ICT's concepts. It's been proven to work by hundreds of thousands of people, right? Both at a high level and at a level that helps you just get a decent income to help stimulate whatever it is that you're already doing. But that's only achieved by doing the right things, both technically and mentally, and then physically, obviously, right? By managing yourself properly and having discipline and patience and all that, right? But hopefully I've been doing a good job of trying to get you guys to realize what's important, and those things that I just mentioned are very important, so hopefully you've been getting value. Again, if you guys haven't liked the video, just a reminder, definitely like the video, subscribe to the channel if you haven't already. It's much appreciated. Helps me help others. So help me help others, yo. So, yeah. I think that's pretty much all we'll talk about here, and then we'll be pretty close to wrapping it up once we get into the indices. But yeah, so that being said, I think that's pretty much it. Does everything make sense as far as what the overall currencies are doing and everything we basically talked about so far? Something I do want to mention too, just a very quick breakdown of why I think traders fail. Right, I have some things that I didn't mention in my notes. I just want to toss it in here real quick. Most people fail with bias and narrative. First of all, because their expectations are screwed. Right, it's kind of a lot of the stuff that I talk about all the time. They just refuse to submit to. And most traders aren't thinking about risk on, risk off. Right, they're not focusing on one asset, or they're focused on one asset. They're not focused on the big picture of things. They're not focused on the higher time frames. Okay, they don't understand the daily and weekly range dynamics. They don't pay attention to power of three. Okay, like they overlook these things in the pursuit of finding an execution. Okay, and then of course they don't know what liquidity levels are important, and they don't have a process to be able to map this stuff out and basically get the foundation of where price is at within a range, right? They can't even define the correct range, right? Which again, the most recent swing high and low creates a near-term range. If that most recent swing high and low is within a larger swing high and low, like this low and this high, right? This low and that high. If it's inside of a range like that, then obviously that is a way to define a current range. You got to understand within that, that's where your PD arrays are at, right? When it comes to near term, right, you find the most recent high and low, and then you map out the PD arrays that are inside that based on premium and discount, right? And then like for example, if price is and mind you, all the stuff that I just mentioned, I talk about on a regular basis, So pretty much the reason that people fail, it's going to be a funny statement. The reason that people fail is they're not focused on what the hell we're talking about. And it's not just me, right? It's all the people that are successful with calling bias and narrative in the ICT community. They're literally using all these different elements. They just maybe aren't as detailed as I am, because maybe they have a course, or they're trying to make people invest in them more to be able to show them this type of stuff. They may mention it here and there, and it's all scattered around, taking the ICT approach, right? The business model approach that he used for his YouTube channel to make it difficult. But every single week, I basically lay it on a platter. In my private group, all this stuff is just amplified, and you get to see it every single day rather than, just twice a week. So, you can imagine how much more helpful that is. For those that may be wondering what the difference is from my private group, which enrollment is closed right now until November. But the difference is obviously there's just more support, more access to examples, a track record of 3.5 years that you can go back and look at to prove that this stuff works and it's not going to stop. And then every single day, right? Sundays, my private group gets the same call, unless they set up a, one-on-one call with me, which I have a couple to do today. But, but even just being on the YouTube channel, I lay it out as clear as I possibly can. I lay it out in a way that shows you what's important. I tell you guys what, people that come to me, they come to me all the time. What should I start with? A month in, I have a couple that just started, and we're on the fence with ICT concepts, but they liked some of the stuff that I post on my Instagram. With ICTs, that's pretty much what my Instagram is. My Instagram is literally like, okay, let's find things from my videos that I like, right? And what would be important? What do I want to isolate? And then I pretty much show all the psychological things, because every single day I'm listening to ICT talk, not in a lecture capacity like the videos. But for the last 4 years straight, even to this very day, I listen to all the different things that he's talked about, all the videos and things that he talks about, psychology and his experiences, and all the different things that he has tucked away in Twitter Spaces and psychology videos and risk management videos. But specifically Spaces, I listen to them every day. Every week I pick one, and I listen to it myself again and again and again. And I have listened to every single one of them. He's done a lot, but if you take like a week, every single week, and you find a space that you're going to listen to and dissect it completely every single day, like listen to it, instead of listening to podcasts about dumb shit all day. If you have a goal to be a trader, take it upon yourself at least once, or once a day, tap in to one of ICT's psychology lessons. Go on my Instagram and look at the whole entire page. It's literally showing you all the different gems that you're able to pull out by listening to what he has to say when it comes to things outside of the technicals. Even some things within the technicals, right, are still powerful. Right? They're not visually being shown, but if you take what he says and go listen to it, it's amazing. Because you could take your chart, listen to what he's saying, and go back test it if you put in the work. And some of the greatest gems that he's ever produced have been on Twitter Spaces, at least from what I've seen, right? Like the first presented fair value gap, he didn't talk about it in a video first. He mentioned it in a Twitter Space. The first presented fair value gap of every hour, of every 15 minutes. He's mentioned that little gem, which you should go and study, in a Twitter Space, and has never shown it live in a video. But it's so powerful, And if you're just watching the videos, or you're not sticking around long enough to hear him mention some of these gems, you're going to miss it. There's some stuff you're going to miss. And it's unfortunate. But that's just the way it's going to be, 5% of traders succeed in the world. 95% don't. 5% of people will actually put in the work. 95% of people will bitch and complain and blame everybody else and quit because they over leveraged. And they think it's because it took longer than a month to master this and they hate their job, they're just going to stay at their job forever. Like, I don't know how that logic makes any sense, but that's the mindset people have. You know? And it's truly unfortunate. But yeah, this is why I tell my private group students, go into his Twitter Spaces and listen to one a week. Use the whole week. Don't just take one day and listen to the whole thing like without taking notes and then just move on. Listen to the whole entire Twitter space, whether you got to break it up throughout a week or listen to it every day for a week and take notes here and there. You know, everything that stands out to you based on your experience right now. And later on in your career, you're going to want to go back to them again. You know, some of them will be less relevant as you already, you know, build experience and become better and understand what you're trying to do. But I encourage you, this is something that you don't want to ever stop doing. You want to read books. The first and second Market Wizards, that's what ICT's mentioned. Every one of the books that ICT has mentioned, I have like pretty much all the ones that he's mentioned in my possession. And I also shown, I have a highlight on my Instagram that shows you books that he mentioned, but also books that I personally have read that have helped me as well. Just further my education with trading, further my mindset. Not so much technicals unless you're using or reading the How I Made $1 Million Trading Commodities by Larry Williams. That one shows you exactly where ICT got his fundamental analysis from. At least when it comes to seasonality and certain other factors. I mean, it's pretty incredible. ICT just basically took some of the stuff that he was taught, and then of course whatever else happened in terms of him figuring out the algorithm, and then just basically amplified it all, just like a freak. Like, let's break it down and maximize the efficiency and effectiveness for every single thing that I know actually works, at least in some capacity. That has nothing to do with indicators, right? And, you know, it's the ICT concepts that we know today, you know, but it all started with certain things like that book and some of the things he talks about in his Twitter Spaces. And if you don't have experience, the best way to gain experience is to borrow it from someone else who's been there, especially if they've been there for either longer than you by, you know, a decent amount, or longer than all of us by 30 years. Okay, 30 plus years now. You know, the wisdom is invaluable. It's better than any book you'll read, those Twitter Spaces. You know, just skip past the annoying parts where he's screaming his lungs out at trolls to get attention. It's pretty much that's why he does it. You know, he likes to clap back and whatever. It's entertaining, I guess. But, you know, don't let that stuff stop you from listening to the important parts. And he does it on purpose, too. He knows people won't stick around, and he'll go off the handle, lose his mind. People will hop off. And then the ones that stick to it, that stick around because they know value is going to come eventually, they get the gems that are tucked in an hour and a half in, 2 hours in, sometimes 3 hours in, you know, 45 minutes in. You know, he tucks it in way in the end or in the middle of the conversations. And you'd be surprised at some of the stuff you've missed because you didn't want to listen to the whole thing, you know. So I just encourage you guys to do that. Use that as an asset. I send basically a ICT Twitter space to my private group that I'm listening to for that week. I send it to them as a psychology study every week. This is the one I want you to focus on this week. This is the one I want you to focus on this week, right? And yeah, you know, I encourage you to also do the same. You know, dig into them. If you haven't listened to all of them, there's no specific one that's the best. Listen to all of them and then figure out which one's the best for you. You know, because, you know, some stuff may be more important to you than it is to me and vice versa. You know, so allow that to be, you know, one of those elements that's going to be personal. You know, there's specific things that certain spaces talk about. But again, regardless, be open to everything that's being discussed except the drama. Just kind of skip past it. you know, because I promise you it's worth it. And it keeps you grounded, especially if you have a bad week. You know, I try my best to be there for you guys as well when you have bad weeks. But, you know, a very good way to ground yourself after a good week, after a bad week, after maybe you feel defeated a little bit. Go into one of the Twitter spaces and listen. You know, that's what he's used those for. That's what he's talked about in a lot of those things. You know, why he's done the Twitter spaces. You know, why he has that type of content. You know, he does it on purpose to be there for us. You know, because not all of us have people that we could depend on. We could lean on for that mental reinforcement and encouragement. You know, it takes a lot of encouragement personally, like self-encouragement, to do this and face failure on a daily basis, especially when we're new. You know, it takes a special person to constantly be able to keep getting back up, even in the face of failure every single day as a new trader, or even sometimes as a trader that's been here for a while that just may not be able to have their footing yet for whatever reason. You know, and it centers you, it focuses you when you have these resources, and it allows you to continuously build on the right mindset. You know, so I highly encourage you guys to look into those things. Okay, his Twitter spaces and any video that says psychology. You know, it's very important. Mind you, every week I kind of talk about this type of stuff too. So, you know, you could use this community as a resource too in that regard, and just come and voice your issues here, or, you know, send me a DM, and I'll be happy to try to lift you up as much as I can. Right? Like the Humble Beginnings Twitter space. Yeah. Oh, absolutely. That's one of my favorite. It's definitely one of my favorite. One of the ones that I sent out to my group was the Twitter space where it's titled I think it was like the real secrets of market making or something, or like the real secrets behind why you lose or something like that. The real secrets behind market making. You go search that up wherever you find them, and you know, it's a really, really good one. I mean, there's so many good ones, but it's hard to make a decision like which one I want to share, but because they're all good, and I encourage you to listen to all of them. But yeah, that's one I recommend for sure for any of you guys to listen to. But yeah, so jumping into the good old indices, looks like everything is still moving the way that is being supported with these other assets. So we're just going to continue to push that. We have a bullish order block here now. So unless this order block midpoint and the swing lows violated, we'll continue to try to push price higher. We did see that SMT at the fair value gap, so that's what triggered in the continued response, plus the weak DXY, plus the strong currencies. And so everything is just moving in tandem with continued buy-side delivery and lower DXY. Okay, and so we'll just continue to see that. I wouldn't be surprised if we try to trade into this a little bit. Okay, we got this monthly candle, right? Previous monthly high was the target of this monthly candle when it opened. You could see the previous candles, high and low, yet again, becoming important depending on what direction you're going. Easily gives you something to target when you go from the higher time frame down to the lower. And you get more context and more pools of liquidity to target on a day-to-day basis, week-to-week basis as you move down in time frames. All right, but we're going to continue to just watch this order block here. Okay, we'll see if it continues to hold that. We'll see if we can continue to press on through this. We traded through this order block. So we'll see if we could respect the mid portion of that and continue to push price higher on the Dow. And the S&P, it's got the same idea as the NASDAQ. We'll see if we could stay above this weekly bullish order block and continue to push higher. This here is a weekly candle. Okay, so we got the weekly high, weekly high, weekly high. So we'll see if that can be targeted. I wouldn't be surprised if it trades a little deep into this wick, right? And then continues to push. If it doesn't, and it just respects the mid portion of this up wick and doesn't even try to come back down here, we are extremely bullish. as we have been for a while. Okay, so we'll just continue to put the vast majority of our execution sizing towards the buy side until proven otherwise. And, any decline should be counter trend ideas looking to reach into a level that sets up further buys. So when it comes to targeting going lower, you would be targeting levels like this order block. Any other PD arrays you could find that can support that, right? We got the order block here too inside the larger one on the weekly. We have previous day's lows, previous week's low here. I wouldn't be surprised if it did want to reach down, sweep that out, then go. I'd prefer it not to do that, right? We got the S&P, got a fair value gap, so I'd like to see us respect that. This high to that low, this high to that low, because they are order blocks, should not see price coming down to the mid portion of it if it's going to be a continued rampage to the buy side. So we'll continue to hold on to that perspective, that objective. We do see that there's a slight SMT in here, right? It's kind of triggered, right? The high here, lower high here. It has basically triggered in the retracement. That's simply just a retracement reaching for an opposing PD array. Remember, ask yourself, what out of the three things is price doing here on this time frame? What has it done? Well, we reached for a buy side liquidity pool, right? The previous high, right? We broke through the weekly order block, left behind a fair value gap, and where are we at here? We're consolidating, but I could see a potential reasonable delivery trying to target the fair value gap once more, and then seeing price continuing to go and do what? Reach for internal range to then target external range liquidity. Reach for an imbalance or some form of an internal PD array to then target external buy-side liquidity again, right? Because remember, it's going to do one of those three things: consolidate, attack some form of a higher low, or reach for a fair value gap, order block, or any of the other PD arrays, or create one. In this instance, it created one while it was targeting the high up here. So it was kind of doing two things at once. But then once it was created, it kept moving higher and then topped out a little bit, and then it started to reach for internal PD array, right? Or a fair value gap, or just retrace to then try to go higher. Because remember last week, I can't remember if I talked about this here on YouTube before, but shit, might as well before we call it a day. So yeah, if you guys could remind me when I note this, have I ever talked about price going from let me actually go to a more empty portion real quick. See, have I ever talked about this before? I think I talked about it in my market maker model video, actually. Yeah, I think I talked about this on my market maker buy model video, or market maker model video. But yeah, price literally goes from internal range to external range, internal range to external range, so on and so forth, right? But how can we take that a little deeper, right? Well, price can trade in terms of a retracement. Keep in mind the three things I just mentioned throughout this call, right? In terms of what price does, the three things that price does only. It only does one of the three things, right? Well, price goes from internal to external. We could also see that as price going from, inefficiencies to stops, or PD arrays, inefficiencies, whatever, right, to stops, right? And then same thing to stops, right? Inefficiencies or other PD array, internal range liquidity to stops, right? Price does this continuously. That's all it does, right? And then, of course, you think about the three questions I just been talking about today. And it kind of simplifies the whole objective and what price is doing in a simplistic manner, because you can complicate everything. Think about 1,000 PD arrays at once, every other market, try to, force your will on every concept, on every moment of the market. but that's unnecessary, right? You just hop on, see where price is at, and ask yourself, right, what has price done previously, right? What has price done previously? And in terms of the 3 PD array, or the 3 questions I've mentioned, which one of those 3 things is taking place at that current moment, right? And if you think of things in a very simplistic way, as far as price only goes from inefficiencies to stops, or some other internal PD array, most of the time it's a fair value gap, right? In this case, it reaches for an inefficiency if it displaced, right? But sometimes there'll be an order block and whatnot, but let's keep it simple, right? So inefficiency to stop, inefficiency to stops. And then it'll do this until it hits like a significant PD array, right? Or like significant high, like a monthly high, weekly high, daily high, quarterly high, whatever the case may be, quarterly fair value gap, weekly fair value gap, so on and so forth. Just a higher time frame point of interest that we can reasonably anticipate price will reject from or have some type of response from. Okay? And of course, each retracement a lot of times can also have like a smaller PD array, maybe a 1 hour fair value gap that then gets traded through and used as inversion, right? But it can continue to set this up and do the same idea, right? Inefficiency to stops, up until the higher time frame levels met, right? And then once that higher time frame levels met, right, we went from inefficiencies to stops continuously, and then a higher time frame levels met, then a lot of times we'll see price that it's going to use that level to turn in any significant fashion. It'll go from stops to stops and blow past an expected inefficiency that should have held. And then in that case, especially if you have a higher time frame level, you could reasonably anticipate that we may be tipping, right? Maybe there's a correlated asset you're watching that does this, right? While one of the other correlated assets does this. So there's SMT also showing at that time as well, potentially, right? Then once price turns from that higher time frame level, because this happens at a higher time frame level, is what you want to watch for at higher time frame levels. Then once it provides you with that stops to stops behavior where it's now disrupting what it was doing, right? Inefficiencies to stops type of behavior. Then you can start to wait and see, right? What is this going to do? Is this going to hold in here? And then once you see that it holds and displaces below this, right, that could be a conservative way of you identifying when price is going to change, right, from one direction to the other. And then when price is, reaching lower like this, you continue to watch. Is there an inefficiency? Each of these lows a lot of times will be a weekly low, okay? Sometimes it's a daily low depending on what time frame you're watching. Because I hope this isn't confusing, but this is happening on every time frame, okay? Again, like everything else, this perspective can be on a 1 minute, it can be on a 1 hour, it could be on a 3-day chart, a 5-day chart, a weekly chart, a monthly chart, quarterly chart. The same principle applies, but the higher the time frame, the slower the movement, right? But that inefficiencies to stops, or internal range liquidity to external, internal to external, until it goes from external to external, right? However you want to view it, this happens on every time frame the same way, right? It's just obviously the higher time frame view is going to allow you to see the bigger picture perspective in relation to these details. Something you also want to keep into consideration too, to take this even a step further. Yes, it's a breaker, balanced price range, smart money reversal in a market maker buy model or sell model. That's exactly right. Well, Nutty Fufa, you're doing amazing. That's why you're a savage. Yeah, BPR with a rebalance that fails to close in the upper portion. Remember, this is critical at a higher time frame level, right? Whatever higher time frame level that is. Okay, but this is the dynamics of how price prints in a very simplistic way of viewing it. Because if you go to the chart, you can overcomplicate everything. Okay, like I've been saying, you can make everything overly complex to try to make yourself feel like you know more than you do, or just to overcomplicate. A lot of times it's overcomplicating for no reason. It's just because we're not experienced enough to simplify it. But hopefully this kind of gives you insight as far as how simple you can have this be to you. And hopefully, all the things that I talk about, the whole process and, everything that we discuss, hopefully it shows that, things can be very simple. It doesn't have to be over complex. There's still some complexities and nuances, right? But in a nutshell, everything can be much more simple than we make it when we first start. And that's part of what my objective is when I first started coming public. It's very important, right? To be able to simplify it, because it was overly complex for me. I learned everything in 1 second, right? I watched every video I possibly could every day, 10 hours, 11 hours. Didn't even eat at times because I was obsessed. I was like, dude, I need this to work. I hate my job. I hate my freaking life. I have no goal. Like, this is my goal. I like this. This seems like it could do something for me and my family. This is what I'm going to do. So this is my life now. This is what I'm going to submit to. And then over the years, obviously I've realized I didn't even have to do it like that. But I personally am someone, like, the type of personality that has to obsess over things. If I try something and I enjoy it, I'm going to obsess over it, because that's just the way it is. I don't half-ass things, especially if I like them, So, yeah, if that's you, just know that you got to moderate a little bit. Don't let your health fail or your relationships break because you're trying to study trading. You got to make sacrifices. Obviously, I'm not in any way saying don't make sacrifices, but you'll know yourself, and how much you require to understand things. If it's difficult to understand stuff for you, complex things, then maybe you're gonna have to spend a little more time than others, and go to the extreme like I did. So, but yeah, so hopefully this is a simplistic way of viewing things. Hopefully it's understandable what I just mentioned. You can also take this a step further. Okay, every time price does this inefficiencies to stops delivery, or internal range to external range delivery on its way to a higher time frame level, this run lower, higher, once it returns back into the high over here, right? What do these ranges become when we return back into it? Or once we leave it, what does that now leave? Can you guys tell me? Can you take a guess? What makes that important? What will make this previous delivery important once we break out above the high after going from inefficiencies to stops, external range liquidity? A new dealing range. Okay, well, what about that new dealing range? So I think I know where you're going, Fritz. Absolutely, a new dealing range if you're trying to gauge another opportunity. But Nutty Fafa just nailed it on the head, like the savage that he is. It's leaving behind balanced price ranges. Every time it breaks above, if it returns and then breaks above, it's a BPR overall. Okay? Hopefully that's kicking in some light bulbs right now. Right? So next time you look at a range on the higher time frame and you see this type of delivery, you know why it shouldn't break down. If it does break down, remember, stops to stops changes things. Right? It should be leaving a BPR, but then if it breaks below it, right, if there's context like the higher time frame that could lead to it turning like that, it makes it very significant to then try to see things change, or it'll just continue. So let's take it even further. Okay? Let's take it one step further. See, this is what happens in my private group regularly, right? With whatever the hell they ask. But I appreciate you guys, so let's continue, right? Let's continue to dump value. So when price does this, inefficiencies to stops, and it's leaving behind balanced price ranges, and it's continuing to respect this type of delivery, what else is this leaving behind? Right? What else is this leaving behind? If it's a BPR, what else can you think of when price goes lower to go higher? What is that? What is that potentially leaving? Power 3 is also part of it, but what else? Okay, higher time frame breakers. Let's get more towards a framework. How about that? Right? I mean, breakers and these other things are they're frameworks. Sometimes it will be a BPR. But let's see, right? If price goes lower to go higher, what is a perspective, aside from power 3, what is another perspective that can lead us to framing out the importance of price going lower to go higher or higher to go lower? What is something that I talk about all the time? Either when it goes lower to go higher or higher to go lower. FVG, okay. Liquidity, okay. All those are valid in a sense, but it's not specifically what I'm pointing you to. You're going to be like, oh, wow, that makes total sense, of course, right when I say it. Because I talk about this all the time. It's a pillar. No, Fufo keeps getting disconnected. That's not good. Uh-oh. But yeah, so let's see. You guys got any other assumptions? I'm stumped. It's all right. It's going to be a shocker, I'm sure, when I mention this, because I talk about it all the time. When price goes lower to go higher, what is a framework that I talk about? Aside from power 3, if we're going higher, what is another framework that we talk about? Not aside from power 3. If price is going lower to go higher, yeah, let's just leave it at that. Lower to go higher. What is an overall structural framework that we use to frame that whole entire delivery? See, you guys got any more guesses? It's something that price is always in. It's always in this thing that I want you guys to guess. When price goes lower to go higher. Aside from BPR, aside from inefficiencies to stops perspective, market maker buy and sell models. So when price goes lower to go higher, like retraces to go higher, or internal to external, or inefficiencies to stops, each and every one of these is a market maker buy model. You should assume, because we're always in a market maker buy or sell model, it's going to always have a framework classified as a market maker buy or sell model if it's going lower to go higher. Or all the different perspectives I just gave you is basically detailing all the different perspectives you have to think about when price is going lower to go higher or higher to go lower. Right? So yeah, hopefully this depiction of information I've just tried to outline about, if price is running higher, how it does that, how to see things when price is delivering like this, right? How to classify the different things, how you could think about things in a more simplistic way. And hopefully you can understand. So now just me saying that market maker buy and sell model is inside here, aside from the balanced price range, aside from, fair value gap to inefficiencies, those are kind of vague, right? But once I mention market maker buy model for price to go higher inside the same things we just discussed, you can now start to figure out or break down things in a much more detailed fashion, right? So now you can start to see. It goes like this, right? So consolidation up here, accumulation, 2 accumulation phases, a smart money reversal point, and then you can start to see, it's gonna be a mess because it won't let me stick it to where I want it to go. Crap. determinants, which is above the stops. Okay, so when it's trading into an inefficiency like this on the higher time, say this is, an inefficiency down here, which is like a daily fair value gap or a 4-hour, 8-hour fair value gap. It could be a weekly fair value gap, monthly fair value gap, whatever, right? It's the same on every time frame. Whether you're using the 1 minute or the 1 hour to frame out this retracement, this market maker model scenario, in that regard, if the 1 hour is what you're trying to observe this delivery on, the 1 hour would be, the bigger lines, right? But this could be the 15 minute or the 5 minute presenting you with the market maker buy model, right? If you're using the daily, right? Say this is the daily, the big lines are the daily, right? It's just it's retracing higher on the higher time frame daily to a daily fair value gap, right? Well, these boxes here are this smaller perspective to break down the market maker buy model, which is generally going to happen if we're going lower to go higher. This could be, if the daily is the larger view, the larger retracement, right? Daily fair value gap fill. This could end up being on the 1 hour, right? This could be the 1 hour breakdown, 4-hour breakdown, right? 2-hour breakdown to then dig in deeper. So you could break down the higher time frame daily retracement to a fair value gap that you're expecting to go higher. You could break that down from the daily, right? Have a rough view of what's to be expected, which is it's going to go lower to the fair value gap to then go higher. But once you have that, you're able to then go down to the lower time frame and really break it down. And then once it breaks above the high, breaks outside of it, you now know that was a market maker buy model, right? Or you're assuming if you could spot it. It's also a balanced price range. It should act as a balanced price range. And it simply went from inefficiencies to stops, right? So this just like broke down a very complex idea, right? In terms of how price behaves, how it delivers. And of course, if you can't spot things very obviously, you got to wait till it opens up, because it will open up and be this obvious, right? But yeah, hopefully this was a pretty clear overview of something that a lot of people overcomplicate, right? Hopefully some of this stuff was valuable amplifications. Maybe if it was new, hopefully it's a light bulb moment. And again, if you guys get value from the content, if you like this type of stuff and you support the channel, definitely don't forget to like the video, subscribe to the channel. Man, this is gonna become a profitability, or I shouldn't say that, consistent trader factory. It's already kind of been, because most people that hang around with us week to week end up really, really seeing some crazy results. Like every single student in the chat right now that's commenting, you don't gotta take my word for it. You can go reach out to them personally and get their experiences. It's not all about me, right? It's about them too, because they're working as hard as they can. And I encourage you guys to keep doing that. And I want to give you guys your flowers. Good job, and I'm proud of you guys. But yeah, hopefully, if you guys do get value, don't forget to like the video, subscribe to the channel, and because this type of stuff is being pumped out all the time. And I mean, it's so obvious every single week. It's always the same stuff going on, and it's always the same tools and tactics I'm using, and hopefully that makes it easy to follow along. And now it brings to mind when ICT says accumulation also occurs at the middle of a range. Yes, it does. Yes, it does, Fritz. There you go. I could see the gears are turning just off what you just said. Consolidation a lot of times is accumulation. Each phase of the market maker buy model, generally on the left side, or every time on the left side in a market maker buy model, it's accumulating positions at a level and then it displaces. Accumulating at a level and then displaces till it hits a PD array, higher time frame PD array. Then at that higher time frame PD array, it's going to accumulate a little bit, but then quickly break out, present you with the smart money reversal. And then once you get into or beyond, a little bit beyond the first, or this one of the accumulation phases on the left side that push price lower, once you cross over or get into it, that's now going to act as a launching pad for the distribution phase. I don't know why they call it distribution. They're distributing their orders to the next liquidity pool. basically displacing or pushing price. The real move's moving where it's supposed to go, right? And it happens at particular areas, specific times, right? So, in specific days of the week, specific times of the month, and even specific times of the year, right? For the yearly power theory, right? So yeah, I hope all this stuff makes sense. I mean, this is a very, very, very powerful piece of insight, and you know, if it doesn't click right away, as it, maybe you haven't spent enough time even looking at price do anything or watched even one ICT video, and you're just popped in here, it isn't gonna make sense if that's the case. If that's where you're at. If that's where you're at, you have to go to the 2022 model and then go through the 2016 stuff, and then once you do that, all this stuff will make sense. Everything will become amplified. Not everything will make sense, but most of the stuff that I talk about will be amplifying and clarifying different things that most people don't understand about ICT's concepts. And it puts the pieces together. I have found that me pushing students to the 2022 stuff ICT does, and then to the 2016 stuff, and then they come and have conversations with me, most of the time, I mean, it's like rocket fuel. They just, like Harley, for example, I believe that's exactly what he focused on. That's what I recommended him to do. And within a year, I think he had like a $10,000 month last month. He's only been trading for a little bit over a year. He's been with me for, I think, a year too, a little bit over a year, which is insane. Okay. Like, I hope you realize how insane that is. Like, I would have never been able to do that quick. It took me as long as I've traded to learn all the things that I know now about myself, about trading, about everything. So. So they in real life, smart money reversal will have opposite PD rate. Yes, absolutely. If price is trading lower and you expect it to be a market maker buy model, expect smart money reversal to happen at a internal liquidity pool, like a low of some kind over here, which is a PD array or some other PD array. Maybe on the 1 hour, maybe on the daily, weekly, whatever could be the reason that this decline is going to go higher for whatever perspective you're looking at. That's going to be what you want to root your smart money reversal at. That's almost always where a smart money reversal point happens, is at a higher time frame PD array, right? After obviously price, retraces in an assumption that it's going to do that to go higher. Perhaps stops on lower time frame. Yeah, exactly. Like I said, some type of like a swing low, 4 hour, right, or 1 hour, or 15-minute. Sometimes overnight, right? If it's like on a 15-minute market maker buy model within the larger bullish trend, and we're maybe we're on like a Tuesday, sometimes it'll just do this, sweep into a 15-minute low, right, or an overnight London low. And this will be London's high up here. So the same principle will apply, even if that delivery is inside of like a 1 hour retracement that's going higher, right? Within the higher time frame expansion, right, on the daily or weekly, right? Makes sense. Or daily structure on a weekly. Makes a lot of sense. Yeah, no worries. Yeah. Mind you, what I just mentioned took me like a year and a half to learn on my own. Like, to point these different things out to myself, it took a long time. And now you guys just got straight pointed directly to it. So this is what happens when you're around traders that know what's happening, that know what's important. And that's the benefit from having a mentor, either here just on YouTube or on a personal capacity. It helps tremendously. Versus trying to do it on your own with no experience and, no real way to get your questions answered. That's why it takes so long for so many people. But that's why I started coming out here doing this. So I can help speed things up. Isn't it interesting how all the describing that we did and breaking down of different things that we just talked about, it made this whole trend that I drew, like just like the basic lines, it made this have a lot more of a story to it, huh? Right? It makes this mean so much more to us. Right? All the different stuff that we talk about. These little crude depictions of, stair climbing higher, then rejecting. The details go so deep when you have someone that knows what's happening and knows what to point you to. So it's funny because if you guys could literally take this at some point, like something like this, and if someone asks you how you trade or what you trade, you could literally take a screenshot of this and say, yep, this is how I trade. And people will be like, what does that mean? I don't understand, right? It just shows how, like, this is just it's an amazing skill set. It's like magic, like real magic. It really is. And it's something that most people will never be able to do. Not because it's impossible. It's because they don't know what the hell they're doing. Or they're listening to an idiot that has no clue either. It just, dummy is making more dummies. I mean, it's ridiculous. So. But yeah, guys, again, hopefully this was helpful. I think I'm actually going to screenshot this and post it as a reference. I'll actually probably use this today with one of my private students. But yeah, because I think this is very, very, very useful. And hopefully you guys feel the same. And yeah, with that being said, guys, hopefully everything has made sense in terms of bias and narrative for what we're looking for on the NASDAQ and all these other assets we talked about for the last almost 3 hours. Again, I hope you guys got value. And yeah, we talked about a tremendous amount of stuff today. Okay, and hopefully you guys got either things amplified or maybe learned something new. If you learned something new and it's kind of fresh in your mind and maybe later it doesn't make sense or you start to lose focus of what it was, just ask me questions. I'm here to help. Those that are in my private group, again, I have a couple one-on-ones I have to do today in about an hour and a half. So just let me know if you need me today because I'll be available after. And yeah, so hopefully you guys understand what it is that we're looking for this week. We did a very deep dive on everything. Talked about why traders would fail, why they fail, and the things that we do, right? The process and all the stuff we focus on, and the studies that I encourage you guys to do, from ICT's spaces to focusing on the mental aspect of things and everything else in between that we discussed today, help you have that solution to failure so you don't have to worry about failing. And nothing's going to change except you as a trader. You're going to become more wise, more aware of what's important. Hopefully I do a good job of pointing you to what's important so you don't have to spend too much time searching for the important elements. And yeah, so in a nutshell, we're trying to look for this to go higher for the NASDAQ. And we'll see if something changes that opinion throughout the rest of the week as the week prints. Okay? But yeah, with that being said, guys, just one more last reminder. It's much appreciated if you guys could go like the video, subscribe to the channel. If you get value from what it is we do here, if you just enjoy being here, listening to the wisdom we share and the dialogue that I have within my students. They ask a lot of amazing questions. And I look forward to having more of you guys ask questions and hopping on as the weeks pass, because the more of you guys that are here, the more I get to help people, and the more of you that I help, I think it'll amplify to the point where I'm helping even more people. But, it's also going to be good because you'll be helping people. We're passing the blessing along, right? So that's much appreciated ahead of time. And always thank you guys for your time. I hope you guys have a good rest of your weekend. Let's have a safe week. Remember the expectation for this coming week. There's no news for the first 3 days, Sunday, Monday, Tuesday. So we'll wait till the news event comes out on Wednesday to really try to think about the risk being normal. Otherwise, there's no news, so there's low probability expectations. We're not going to go in there gun slinging right away. So we're going to let price print based on the analysis that we talked about today throughout the last couple hours. And we'll see if there's any adjustments that have to be made. If there is, I'll let you guys know. If not, expect me to come back on Sunday telling you yet again how amazing the week was. Okay, based on the stuff that we talked about today. All right. So God bless each and every one of you. I hope you guys have a safe week next week. Again, if you have any questions, let me know. And I will catch y'all on the next one on Tuesday. All right. On Tuesday, since there's no news, we'll be on at 6:30 a.m. Pacific Standard Time, just for a reminder, okay? So with that being said, take care, you guys.